more than ever, especially with the rise of AI, organizations are actually looking for star players.
If you have good people, if you don't pay them well, I can guarantee you you're going to lose them. I'm looking for good people.
Someone came to me. She's the VP of my organization. She comes to me and says, Meta gave me a role. No, let's start this conversation. We're saying we should increase salary. No. Yes, exactly. So where do I start to?
Arnold,
Immediately the conversation started and she just mentioned Meta.
You don't
I just sat back. So the thing is, my prayer was, you will not lose this job.
Hello everyone, welcome to Drinks and Mics, brought to you by Nairametrics. My name is Ugodre, and of course we do this every week. We go live on our YouTube channel, Nairametrics TV, 6 p.m. every day for those who are just watching for the very first time. If you're not watching, where have you been? Just follow us on our YouTube channel. Of course, click the notification button. I've got the full gang in the house today, and this is the Detty December Edition. Of course, we've got a full house. Shout out to everybody who is here to witness this. Thank you all very much for being here. A round of applause to yourselves. Great. So I mentioned I had the full gang here, and in a very particular order. I'll start first with, we start with title people. So I want to start with Otunba. Otunba Del P, welcome to Drinks and Mics.
Good to be back.
Yeah, we saw you playing with lions and tigers and antelopes. And is that what you do now as a hobby?
Well, I've done 3 now. So I've done lion, tiger, and cheetah. So
just
the one that was very interesting was I was feeding the tiger baby milk.
Baby milk.
I'm like, some people have it good in this life. While we are all doing spreadsheets and doing modeling,
somebody are just out there feeding tigers
like cut soap for me
with milk. Of course, we'll have the newest SAR. I don't know. But we do call him SAR Arnold Dublin Green. Welcome, sir.
Thank you.
You're about to be a chief very soon.
No, just a small title.
You always call it small title, but you're SAR. You're SAR Arnold Dublin Green.
Thank you.
Of course, we got the Oracle himself, Mr. Sam the Man.
Yeah, I don't like that name, but I'm trying to get rid of it.
Oracle of Edu.
They're calling Oracle's last and definitely the least. To my right is Mr. Tunji Andrews. Yeah, last and definitely the least.
You all can feel it,
Call it whatever you want, but he's last and he's one of the youngest on the panel. But it's okay. It's okay. All this white is to just intimidate us, make some of us feel like we're older. I've done everything in this world to make you guys, believe that I'm at least somehow younger or the same age as Tunji. But this guy just takes it a notch. Now his shoes he wears, now he's a brown shoe.
Listen, the watch. The watch. Tunji, how far?
This new pension money.
I think we kind of know the people that have made money this year. Just look at the progression of it.
I called him yesterday and he was like, sorry, Baba, I did beat you. I did last year with my team. Can you imagine?
Last year he was in a hotel in Ikeja for strategy meeting.
Yeah, now he's on the beach. He's doing strategy sessions.
So strategy works. Last.
All right, thank you all for being here. So this is the last episode for the year where we take a break and then we're back in January. So we will do a lot of recap on everything that's happened this year. And then, of course, we look into 2026. And, of course, we got with us very incredible guests, people that we highly, highly respect. In fact, it's an honor to have them here with us today. Let me start by inviting our very first guest. When they come up, they're just going to go right there to the guest section to sit with us. Let me start first with, sometimes a lot of the positive things we've seen this year in Nigeria has been monetary policy, a lot of work from the central bank, and there are a lot of amazing people behind that work. Some of you don't even know who they are. We're able to drag one of them here today just to give us a lot of insights into
brilliant minds.
Yeah, one of the brilliant minds, not just at the CBN, but in financial markets in general for those who know him. So please, a round of applause and welcome to Drinks and Mike's set, Mr. Mayokun Ajibade. Okay, as you can see, Tunji now understands respect, to respect his elders, because
He's not the oldest in the room, by the way. So there are older people in the room.
On this table, there's one guy who's, who's just a couple of days older than me, but likes to bully me. He's right in front. Shout out to him in a bit, but that's okay. It's okay. He's right in front of me. We also have another special guest with us, somebody who has been there, done that, everything banking over the last 20, 25, 30 years. He's done it all, banking outside Nigeria, banking in Nigeria. He's been into merger and acquisition. He's reinvented himself several times. And now he's leading one of the foremost startups in Nigeria, especially when it comes to challenger banking. This is somebody who has been with traditional, he started with new generation banks, fought all the old ones, and now he left that battle, and he's now gone to challenger banks and trying to now fight the generation banks. So please welcome everybody. Please help us welcome Uzoma Dozie, former MD Diamond Bank and MD Sparkle. Thank you so much for being with us on Drinks and Mike. So as you see, it's going to be a bumper episode. We have we're going to have two halves of this show, and I hope that you stay with us all through. Three halves, actually. Well, it's not three halves, three thirds. Sorry, 3/3, yeah. So we start first, before we have Mayo on set, just to, tap into the gang here. Let's 2026 review. Dilly, what has been your highlights? 2025, I beg your pardon. Some of us are in 2026 already.
I think, there's been a lot that happened things were going in the right direction. I think some policy misdirections sort of derailed some of those, just trajectories. So the one that comes to mind, and I've been very passionate about, is the CGT conversation.
You can't let it go.
I can't let it go. I'm sorry. It's one that has, I think it's sort of been a huge distraction to sort of the growth trajectory of the market and the country. I don't think we're at the end of that yet, but we're hopeful that before the end of the year, there is a clarity. But it was very evident from the Drinks and Mike session we had this week with Ahmad, where an international portfolio investor who's been here for almost 25 years did say very clearly that, CGT is not something that would work for Nigeria. And if you look at countries that have implemented it, they've all had to wind it back. Yeah. So, there's no point of us destroying our market or just distracting the train. I think we just need to shut that conversation down right now.
All right. Tunji, yours has been positive all through, though. We all know.
So the pension industry, which is where I work, is that how they say it? Went through what we call Pension Revolution 2.0. So a lot of changes, policy evolution, and things like that. It's been a really positive year for pensions, at least if you're looking at it from the forward-looking prospect. I'm not sure a lot of the traditional players would enjoy what happened, because it's what it did was it generally meant that the business as usual is starting to go out of the window, and you're starting to see new ways of doing business as pension providers. But for us, it's been the absolute best year we've ever had at our bar. For me, as running the startup, it's been the most. That 1 year when you look back and you say, God, I couldn't have predicted this would have happened this way. Yeah. But yeah, this was that year. So I'm super excited about 2025.
All right, fantastic. By the way, our bar is one of our major sponsors for today's Drinks and Mike. So shout out to our bar. Yes. And of course, shout out to all our other supporters as well for supporting us.
That's why we can sponsor.
All right, Mr. Dublin Green or Sir Dublin Green.
Yeah. So for me, it's 2025 has been I was trying to find the right word. It's a politicizing of markets. I think in my career, from the beginning of my career,
Politicizing?
I've always assumed that markets are economics and no one cares about politics. I think that 2025, I've seen global markets become very political, and it makes it easier for market participants because now all I've had to do is just listen to politics and policy holders, right? So, for example, Trump gave us the trade ahead. He wanted a weak dollar. Yeah, and he said this from Q4 2024 to Q1 2025. So everyone knew that, okay, position yourself for a weak dollar. CGT was announced. You knew that, I'll sell my positions. And then when things make sense, I'll come back. So I think that 2025 has been a fun year because I've just, to make things make sense, I've just had to listen to politics and policyholders. So saying that gold has had a stellar year. And again, that was another easy call, right? So we all saw the structural change coming. We could all get ahead. Again, weak dollar, we all knew, okay, anything that is priced in dollars when it's a weak dollar looks good. Equities, global equities, again, politicians gave us a heads up. And it's been one of those years that has made me realize that politics has made it easy for market participants. And I suspect that this trend goes on into 2026 because again, they're also giving us a heads up on what 2026 will look like. So all you have to do is listen to politics and policymakers and you can actually make your decisions. So it's been fun. And I think 2020, it carries on into 2026.
All right, interesting. Surprised you're just finding out that politics has a lot to do with markets. But anyway, Sam.
Yeah, so I mean, in a year where it looks like a lot of things have gone right? For me, one of the things I've been doing is a lot of introspection, right? Trying to understand if the calls we made was right because of why we thought it was right? And that's very fundamental to how we think.
Or just that the market just went in line with...
Yeah, because there are a lot of, this is a multivariate system, right? So a lot of things affect it. So when I think about it, there are like three things, like two globally, one local, that troubles me a bit, right? In terms of calls that we got wrong, right? 2025 has been a year where everybody has made money globally, regardless of the assets that you bought, right? There's only one asset that has lost money this year, and that's energy, oil price, right? So that was the wrong call for us, and I've been spending a lot of time trying to figure out why we got that call wrong. We can go into details later as to my feelings and my thesis and how that rolls into 2026. Another call that I felt like we got wrong was US inflation. Because obviously with Trump and tariffs, and this is why thinking about things in very linear systems, if it's linear way, can be very dangerous, right? It's only becoming apparent to us that what we have experienced in the US was basically fiscal consolidation at a scale that we haven't seen post World War II, quite frankly. And so are we really surprised that it has dampened economic activity outside of AI and as a result have had a lowering effect on inflation, contrary to the expectations of what tariff was? It's now I'm trying to frame that conversation in a way that makes sense and I can move ahead. But I feel like as an institution, we got our oil call wrong. We got our inflation call wrong. As far in terms of Nigeria, a lot of things have gone right in Nigeria, right? For the first time since I started to watch this market professionally offshore and then as an investor locally, I wasn't around in the early 2000s, so I stripped that out of my observation and I can talk to anecdotes. This is the first time in my life, right, that I feel like Nigeria is positioned for dollar-based per capita income growth, right? It's outstanding when you think about it, the work that has been done, right? But increasingly, when I look at the year over the last 12 to 18 months, I've had three big drawdowns. And those three big drawdowns have been driven by policy. The first was the banking sector recapitalization that interpreted equity in a way that I've never seen before. In hindsight, I am starting to understand
Yeah,
why.
because you didn't like it initially, I remember.
So, but that was a big drawdown for me. The second big drawdown I suffered was the windfall tax, right? And then the third big drawdown was capital gains, right? And
I thought windfall tax was last year.
Windfall tax was actually no. Well, I think within the next, it's 12 to 24 months. That's kind of, I'm just using the reform period as my sample point, right? So what is consistent there for me, and I think as a corollary into 2026, is the biggest risk for Nigeria is policy error. Like no questions about that, right? I think macro-wise, directionally positive. Can we kickstart an investment cycle? We can debate that. But the risk of policy mishap to market confidence is extremely significant. And we saw that play out in November. So that's kind of my three big, I mean, it's not, I don't want to dwell on, no, I made money here, I made money there. I think we've all made money. So we are not special in that sense. But I wanted to highlight.
So the issue is not whether we made money or not. It's
how we made.
What we lost, have you?
No, it's not like we lost. Like it's been a fantastic year professionally for me. I can't
Net
complain.
was all
Your
positive,
fund is up almost 50%.
70%
annualized. Yeah, exactly.
Yeah. So I'm not complaining about that. But
That's
again, we operate in a business where we're only as good as our last trade.
Yeah.
And so it's very, very important for us to know why we are making money. And when we make calls that are wrong, why we make those calls that are wrong. So a lot of my last 4 weeks has really been beating up my team to basically not get too arrogant and say, you know what, guys, you are not that smart. You got these calls wrong, and you need to understand that.
That's why you're not giving us Christmas party. Finally.
Yeah, that's true.
Christmas party.
That's true.
Maybe that is Sam setting the tone for not wanting people not next year.
You think we're buying this stuff, but we ain't buying it, man.
You have to pay. I think competition in financial services in terms of talent is going to intensify in 2026 for sure.
Yep.
So if you have good people, if you don't pay them well, I can guarantee you are going to lose them. I'm looking for good people. So if anybody knows any good person that wasn't paid well, please call.
All right, we're going to talk about future of jobs as well.
I think that thing is going to happen too in technology.
No, we're going to talk about future of jobs at some point. So for those who are interested in that, stay tuned. Uzoma is here for us to discuss that as well. For me though, I think mine was FX. The fact that we saw a stronger Naira in 2025. The folks on my left and right were very bearish, on the exchange rate.
Anecdote.
Yeah, and saying thanks to, but please, thanks to Mayo here for all the good work that they've done. I think it might be easy to underestimate what that means, but the fact that we've seen the exchange rate stable, in fact, strengthen this year is a massive, massive
what was our
upside.
prediction again?
You predicted 1.8.
So before my
1.718. You and Arnold. You're trying to defend what are you trying to do?
No, I'm not defending anything. I just want to know what my position was.
I just want to say,
Roll the tape.
Oh, okay.
So before Mayo comes on, I don't know whether he's going to appreciate me telling this story. So after there was an episode where we're going back and forth, and obviously I took the other side of the trade, and then Mayo, who's the guest here, is a CBN brain trust, called me and said, Arnold, you're going to lose a lot of money. Yeah.
I hope you listen.
I know me. I didn't listen. No, I was sure.
All right, so that was my own high
point.
point for 2025, and looking forward to 2026. So at this point, Otunba is going to exit, and we'll have Mayo in the house. Please, a round of applause for Mayo and Otunba as well.
Mayo, he came with his own wine.
Oh, thanks, guys.
All right.
Is my mic working?
All right, welcome, Maya. A lot of good work this year. So maybe let me start with what your high point was this year, though. I mean, we all have. I'm looking at the positives. I told them high point. They were all telling me negative, how they lost money. You see this investment, these people, they are telling us how they lost money, not how they made money. How they lost money. The little one they lost. So what has been your high point this year?
I don't know. I mean, look, it's been a roller coaster of a year. I mean, we said that this time last year, to be honest. But I'm not sure I can pick out because there's just been so many things that have gone
Really well.
extremely well for the macro. You spoke about the FX, the sustained flow of capital that we've seen has been shocking, and you guys probably don't see the data as much as we do, and that's more broad-based than anyone had expected this quickly. And in terms of the FX market in general, the ability of that market to, which was the work we put in last year, to be honest, but that crystallizing again far, far earlier than we thought, and the market being able to function much better than we had anticipated at this time of the journey was also quite impressive. So I think the banks or the market players have a lot of credit for that, just allowing the things to function properly. And then that's just set the base for the economy to just kind of take off. So yeah, I think we'll see how it pans out.
So I have a question, and I'm glad you're here.
Jesus.
No, I was just waiting for the question.
Because for me, I mean, fantastic work that has been done on the CBN. It's been at the height of the instability, and while we were undergoing those major adjustments, there was a clear, looks like a reluctance to accept external backstop, right? And we've been able to achieve macro adjustment that I didn't actually.
Sorry, could you just external backstop?
IMF. That's right.
IMF. Just say IMF.
So, I mean, we've gone through this without significant large external support package. What, in your opinion, because usually when countries try to do that, they run into a lot of problems. What has been the plumbing and what has been the baseline that gave you guys the confidence, or you took the risk, right, that we can make these macro adjustments without a significant backstop?
So that's an easy question, to be honest. And I hate to say this, but it is what it is, right? There's something we bandy around and we talk about quite casually. We call it political will, right? And honestly, that has been the single largest factor in this reform journey. If the president wasn't up for this was going nowhere. And I recall when we started the whole tweaking with the FX rate and all of that, December 2023, January 2024, it was the big, when I was asked to join, the big question was, are you guys up for this? Because what needed to be done wasn't rocket science. It was a case of, look, but are you ready for the nightmare scenario or how bad things could get before it got better? And the answer was overwhelmingly yes. Because, again, probably an easy answer because the options are very limited, to be honest, right? Yeah. So it was clear. But again, it could easily have been, look, let's just paper things along like we've done for decades and see what happens. Let the next guy come and take all the hard decisions, right? And I think the president coming out and taking out all those subsidies by speaking about it at the top helped, but actually staying with the real work to make sure those things really happened, right, was quite important. And do not underestimate how much that meant. Look, if we didn't have the support, we'll have been fired. Because it wasn't easy watching exchange rate go to 1.6, 1.7, 1.8. At some point, everybody was bet on 2000, 2003. And it wasn't because we weren't feeling the pain or people didn't understand that this was painful. But we just were convinced that you needed to see that through and make sure the market functioned properly before you unleashed what was going to be the sustainable way that this thing was going to settle wherever it is. And honestly, today, I don't think there's anybody, at least on our side, who sits around thinking FX must be 1,000, 2,000, 1,500. No, we don't worry about the rate. It's about let this thing just work normally. If the fundamentals support it, so be it. Wherever it lands, it lands. And all the positive moves you've seen has only been fundamental driven. And of course, policy direction here and there, but you need the market to just function. And I think the governor was convinced from day one, this was the only way.
So can I play devil's advocate one more time? If you were to exit the entire stock of FPI almost,
We'll be all right.
Yeah, I was so
I've answered that question 50 times every week over the last year.
If we were what?
So okay, if we were to
exit
exit the entire almost stock, because I think the first leg of the stabilization strategy was driving that hot money flow in, right? But now we're seeing remittances and we're seeing oil revenue pick up, right? I'm just trying to get a sense, like, what will cost, from your perspective, Well, and firstly, what is the size of that stock? Is it 6 billion? Is it 7 billion? Is it 8 billion?
Whatever the number is, okay?
Oh, shit.
Whatever the number is, right? Yeah, look.
I wasn't expecting a number, but
If you take...
That's why I put him on this.
And it's true, we've been asked this question in public at every investor roadshow, conference, engagement we have. It's the first question that comes out. So it's okay. And yes, do we have portfolio investments in the market? Of course. Did they bring us FX at a time where the market needed that liquidity? Of course they did. Did they help us with the stability and market confidence that's now feeding into inflation and all of that? Yes. Are they likely to go when they get tired? Sure. We know what the risk is. But again, headline reserves at 45 billion. How much is it? So we lose what? What number scares you of that 45? Again, so this is all about, as long as your fundamentals are
I don't
okay.
care about the absolute number. I care about the flow in the number.
Yeah. So again, and that flow will be supported by the stock, right? Ultimately. So if we have a shock, right, and you have an external shock that says, okay, people don't like Nigeria anymore. We want to take all our money and run. So yeah, the market will adjust. There's a shock, and that's what markets do. All right. So you don't expect things to keep strengthening or be when there's a shock that leads to a depreciation. We saw that in March, or is it April, when Trump went crazy? Yeah, and we lost 4-5 yards in a very, very short period of time. People didn't realize how much of outflows we got, but we were quite surprised at that.
We saw that in the price.
But it was, we saw it in the price. But the
But
flow
it should be in the price. I was very pleased about that adjustment mechanism that existed, because in the past system, you try to
keep it.
exit. The adjustment in the price for me was very great, because I was like, there is now finally a shock absorber in our exchange rate
and
system.
that really is a story, right? Because again, if you lose that ability to absorb shock at that market front, then you create problems for yourselves, right? And this is what Nigeria has been through decades. Since I knew anything about foreign exchange, 22 FX to 81, bury our heads in the sand, pretend. Then one day you got to make the adjustment. People worry about depreciation. Then you do it again. Hopefully we've learned our lessons now, right? I will allow these things to work.
My question is, and we talked about it a couple of weeks ago. Fantastic recovery, stabilization story. We've been able to stable the market, and it's not working. The question I have, and I've always had for the CBN, or at least the institution, is there a growth story, and how much would the CBN want to support growth in terms of, because there's a second question.
This is where we'll break into science. I'm just warning you ahead.
There's a conversation we're having. We're coming from a CBN governor that did a lot of pseudo fiscal supporting of the economy.
So much.
I totally hate that. But there's a middle ground, right? So we can't go from that extreme to where the CBN was planting tomatoes and rice to now completely.
We did Nollywood as well, yeah.
What?
We did a lot of creative industry. Did all sorts of things.
So going from that to absolutely not supporting growth. So my question is, where are we in that entire spectrum?
Look, so when you say, and the way we tell this narrative is quite important, right? So when you say not supporting growth, what does that mean? You mean not giving money to people at 2% to go and...
No. I don't think 2% is reasonable. So for instance, one of the conversations we had last week was around the MPC not cutting rates. And he feels...
They cut rates, right?
Yes, so he feels the MPC cut rate. And he was talking about the corridor and the fact that they've created a bit of a leeway. And my thinking is simple. We've been able to stabilize dollars, right? But we still need people to go back to manufacturing. We need more farmers for more industrial farming. We need more manufacturing, but these people cannot be lending at the rates that the market is.
You guys calm down.
No.
Calm down. So we do have a sequence, right, of discussion. So so we're talking forex policy, and then we'll go into bank recapitalization.
It is related, to be honest.
So we'll get there. So I think. Are there any other forex related questions? Yes, keep it.
So for me on the
any forex related questions.
So for me on the forex side is I'm trying to figure out your 2026 plan with Omo, right? So what I've noticed at the end of this quarter is the DMO has started to raise rates with Treasury bills primary auction. We saw yields go up on the primary side, go down to 17, 19%. Now they're about 21, 22% in the DMO. My assumption is you guys are now talking,
and the DM. Please, yes, that's why.
Yeah,
so
yeah,
so now the DMO
Monetary
started
fiscal
to say,
coordination.
started to raise rates with treasury bills because OMO issuance will slow down or start to go lower. That's what I'm seeing on the DMO side. And it's interesting to see that coming in at the end of this year. Is that what we will see going into next year? Is DMO going to continue to issue at 21%, 22% and then OMO disappears for FPI to still come in?
So the actual levels where these things come out, right, i.e. the rates, will be market driven for sure, okay? The quantum of what DMO does in terms of issuances is guided by their calendar. I'm giving you the official answer. It's guided by the calendar, which is also driven by how much of a fiscal deficit is there to be financed, right? So, and that really is the bottom line. What happened this year was, as we came into Q4, it was very, very obvious, right, that there was nothing left in the headroom for domestic debt right, anymore. So DMO naturally just didn't have room to issue more, right? So a few things happened, then they got some room, so they had to increase what they put on offer. So that's really demand and supply forces playing out. Now, when you look into next year's budget, whatever that deficit number is, whatever that comes into the domestic financing, and I think it's already built into the medium-term framework,
which we haven't seen.
Yeah, and it will come out.
He has seen it.
It will come out. what that will tell you is that, look, okay, again, you roll back to what's happening on the fiscal side, on the revenue side, right? With tax revenues going through the roof, a lot of positive revenue optimization beginning to happen. The need for government to borrow is actually beginning to decrease, which is a good thing, right? Because the macro is getting stronger. Now, what that means for you guys who are playing the market is, again, unfortunate. You just wouldn't have as much instruments to play with as it used to be.
Come to equity market.
Well,
They come to equity market and then they come to corporate debt market.
Which is what I said at the forum where I spoke a few months ago. And this is all how recovery, reform should happen, right? Now, to answer your question, on our side in the central bank, we've also had this anomaly where, again, this is the things we've said publicly, where the OMO instrument is particularly a liquidity management tool. It's been turned for all sorts of right reasons, right? To be an investment outlet for domestics, portfolio investors, and all of that. Again, fair game. At some point, as we return to orthodoxy, these things are being adjusted. Now, you recall, we're already moving to transition into an inflation targeting framework. If you read about that and what it entails, the way we implement monetary policy in the market-facing side is actually, will need to change to an extent. Now, I'm not saying everything is going to happen at once. These things are sequenced, transitioned, and all of that. But we will begin to see the way we've seen OMO over the last decade is changing. We're going to see a lot more action at the short end of the market because, again, if you don't have a liquid overnight tradable point, every other thing you're doing
Across the curve.
across the curve, you need to get your overnight. You fix the 1 week, if it were 2 weeks, 1 month, and you build it that way. So we've had this kinked issue where DMO is here, CBN is here on the same 1 year government risk. It's a bit of an anomaly, but we know why that is there. But hopefully all of that now begins to change. A lot depends on.
So you guys working to close the gap? Because like I said, I'm seeing treasury bills go
The market
up.
will close.
The market will close it. Let's be honest. The market, this will work in because again, we've not. I don't think we've issued a 1 year instrument from the CBN in 4 months, 5 months. The longest tenor we did, I think, was 260 or something. So mostly on the short end. One, because again, we don't need to, right? And because the short end of the market is effectively where you mop up liquidity. So if I'm paying you 22.5 in the overnight window as a central bank. So we are saying any liquidity in the system, we mop it up at 22.5, right? From the banks, right? Then why do I need to do anything else? So there are trillions of Naira packed there every day. Now, whether I issue OMO or not is secondary. That's about the curve, right? So if you want to take a view that you think 1 year rate is going to, or 6 months rate is going to come down than 22.5, then you go and buy 6 months rate at 19%. That's your problem. Take an investment view. What we've done over the years is made you guys, your work very easy. Because you could just sit there lazily and just go and buy 1 year because you know it's always with every week. So now the market is hopefully getting a lot more dynamic, right? Tie this back to the work we're doing on the fixed income side. So all of this is all sequenced and working to make sure the financial market just functions better. Because once that happens, the rest of the economy, to your point on growth, then gets a chance. Because if you don't have the basics, we can talk about it, say all the right things. it just doesn't take off because you start, then you stop because the fundamental blocks haven't been built. The way we've done the FX, now, hopefully, a couple of months, you see people coming with products. Look, all the time, the governor says this all the time, like, we want to be a boring central bank, okay? FX, why you
What does a
calling
boring central bank mean?
Again, I
like
think
you want foreign exchange. Why are you calling me? Why you just go and sort yourself out, right? Why am I waking up every morning and the first topic on TV is, the FX rate moved from 1455 to 1457. I mean, give me a break. But there are more important things going on in the country that people should focus on. Now, I don't blame them because we've created this monster around this thing. But the more we do this thing right, that becomes less of a focal topic for everybody because there are other things to do. Now, you get that right. There's stability, people can predict, and if you think the risk is going one way or the other, you can hedge yourself. Then you carry on with your business and leave price to move the market, leave it to the experts to manage, right? If your business is selling or making soap, focus on making your soap efficiently.
I think Mayo, I think the challenge, and I think that's obviously a function of how the CBN has operated in the past, right? Is there's still this mindset, and I think Tunji said it, that an institution that is supposed to be focused on price stability across the three measures of price, right? Suddenly, we are talking about growth and developmental initiative, largely because fiscal space used to be quite limited, but that is actually improving. I think it's important to reinforce, right, that the CBN has a price stability mandate over and above the growth mandate. So that's how I see it. And if you achieve price stability mandate, the fiscal authorities can then pursue non-inflationary growth. And what we need is non-inflationary growth. No?
This has been
You're actually saying the same thing, to be honest.
So let me point this out. Let me point this out. So it is true that the CBN has a stability mandate, but it is also true that the CBN as an institution is not just a monetary policy authority, it's also a regulator of the banking industry, which is the direct catalyst to growth in Nigeria.
Correct.
Right? So if that is true, its direct overseeing the banks has its direct impact on what the banks do to the economy.
You want the CBN to tell the banks what to do with their
No. I'm not saying that. But
Or to bring down rates so that banks can then do lending.
So again, a lot of these things are, and you got to situate it with a lot of, look at where we're coming from, where we are, and where the aspiration is, or where we need to go. Now, nobody argues that growth is required, right? Because if all of this is going to stick, right?
Growth needs to happen.
The economy needs to fire, right? Yes. And if the economy doesn't fire, all this stuff we're doing is temporary. If the fundamentals do not shift positively, then all this monetary policy stuff, we're going to be at double-digit inflation for too long, and then interest rates are going to be too high and all of that stuff. So again, do not forget that this is a journey, okay? Now, and I think I'll quote my boss again, right? So even if I decide that I want to go and support whatever sector you call the real sector, right? And give them whatever they need so they can go and grow rice, shoot movies or whatever they need to do.
May we never see that again.
Hold on.
In Jesus' name.
Again, that's just an example because it's very common. But in any way you look at it, even if the central bank today decides that, okay, forget all the noise we've made over the last 2 years or whatever, we see the need for this, let's do it. We actually got no capacity to do it. Because I think he said it at the last MPC, right? We've got, I'm not sure what the latest number is now, maybe 5 trillion plus or minus of cash still out there in these projects, right?
Yeah.
Which, whether we're struggling to get back, people are forgetting to pay, whatever reasons you want to give, right? So all that is still there. You speak to the banks, they still got DCRR locked up in all sorts of things. So again, do not forget that this thing we call growth and the need to do it and in a way that CBN is supportive. This is the same story that was peddled and told when they did the last one, right? So the stories do not change and nobody argues with the reasons. But again, there are things that economics dictate to happen for these things to be sustainable. And for me, in my own very short career, there are no shortcuts to this thing. Yeah. If you don't build the building blocks of your economy, you don't get your fundamentals right, you're just messing around. People will like you, you say all the right things, politics will be great, but you're going to fall off the cliff again. We've seen this, and Nigeria is a classic. Look at it from the 80s. It's been the same boost, bust cycle. We've been trying to do this because you need to sort these things out at the core. If our inflation is at 25%, you've got a real problem. I put it to you, if your inflation is at 15%, you've got a real problem.
Yeah.
Because nobody goes anywhere with double-digit inflation.
Yeah, of course.
You need to get your inflation down to properly single-digit, mid 5% plus or minus.
No,
Not me. I'm just saying, because again, when you think about what inflation does, right? If you save money, right, and you cannot cross that hurdle, then what's the point? That's why people end up chasing FX. That's why. So it leads to all this other stuff, right? So keep inflation low properly. Look, I was in Indonesia a couple of weeks ago, and it was interesting because they got this inflation monitoring team. It's just like cowboys, right? The price of this has gone up in this province, and they're exactly like Nigerians, right? Crazy people. Guess what? People jump on planes, trucks, whatever, to make sure either that stuff is imported, grown, the storage fixed, to make sure the price of that thing comes down. Because they don't mess around with it. Because they know they've been through this cycle a number of times, right? Because inflation is the thing that kills you the most. You can be growing at 10%, 20%, whatever. If your inflation is 30%, look at Zimbabwe, you're wasting your time.
Yeah.
A few people will make it because you're clever, you can arbitrage the system and all that, but majority of the economy, of your people, they're going to be in poverty. You don't lift anybody out of poverty at double-digit inflation. I've not seen any country where it works. And this is what Nigeria needs to get to.
What's the central bank's inflation target?
Ladies and gentlemen, you can see this gang. They are so excited to have my
Sorry. Let me ask my question.
I have two questions, please.
So first of all, it did allow you to answer my question, but you've kind of alluded to it. But the second question I wanted to ask is, I know that the CBN has a statistics office, a statistics
Quite
department.
good guys, actually.
I do know. I know. So the question I wanted to ask is, and this is please forgive me for asking.
No, it's all right.
Does the CBN believe NBS data as concerns inflation?
No, but it's obvious that you don't, right?
No, don't say that. I mean, that's probably wrong. Why do you think we don't?
Well, for one, the targeting seems to be every time when we put policy rate, it seems to have a direct linear correlation to inflation.
So bottom line is that every time inflation numbers is down, we just minus it by 10.
So for me,
right? And it gives us an idea of what add 10 to it.
No, so that is...
I'll tell you something I found. So I was, I came from... I don't consider myself as a public sector guy, but I've been there for a while now, and I've seen a few things. One thing we all underestimate by sitting on the other side is how good these guys are. Right, the guys
the
are
MBS guys or your
public sector guys.
MBS, CBN, they're actually quite good at their stuff. Now, the reality is, right? Again, this is Nigeria. This
Please
is
say
Africa.
that again. The MBS guys are very good.
They're quite. They know what they're doing, right? So
by the way, Tunji was
and again, you think they sit there by themselves and crank this thing up. No, they actually got proper methodologies, proper review processes. They work a lot with the international bodies, the World Bank, IMF. And there's a full challenge process as to how their output is reported, right? So, I mean, there are times you realize that, something's meant to have come out at 8 a.m. in the morning, is delayed till 3, 4 p.m. That's because there are guys who are there saying, no, you can't do that because this is my own thinking. And they allow that challenge to happen, right? So and I think that's very, very good and encouraging. Do they need more funding? Yes, okay? I think personally, institutions like that should be put in a framework that they get money irrespective of what budget and all these things do. Just give them all sorts of money that you can give them so that they can do this thing because it's good for everybody.
I have stories.
At some point, I was advocating that the bank should actually create a fund to just make sure the NBS has got more than enough money to just carry out this research. Because again, moving away from NBS, when you come to the CBN, one of the things I was actually quite amazed about is actually the quantum of smart geezers we've got in that building. I mean, it's just, you're like, Jesus, that's quite impressive. Okay. But again, we don't talk about it enough because there's a noise about all sorts of funny things. But there are a lot of good guys in there. And we've got our own research team who actually go out independently, lift their own inflation data, market surveys and all that, which is when I sat with them a few times and actually the rigor they go through, I was blown away. And So we've got both. We've got our own independent numbers. We've got the MBS numbers, and they don't differ by much.
So
guys,
you asked
guys,
why
guys.
he asked why I don't think you guys trust the numbers. I think for me it was simple. The fact that you didn't cut when we saw inflation go down.
We
to
see a lot of
16.
things
So-
you do not see in the
Okay.
outlook.
And there's also the part that inflation is a backward-looking number. Inflation expectation is forward-looking.
which I
We haven't
understand.
broken inflation expectation in Nigeria. So why are you advocating for
Guys, there are
aggressive
several other
cuts?
things to talk about now. Bayo, if I leave you with
But
these
this
guys,
one,
we'll not
they
finish
do
today.
No, I have to.
We want to talk about forbearance, right? I beg your
Forbearance.
pardon, not forbearance, bank recapitalization. Sam mentioned it earlier. And one of the things that we've debated a lot on Drinks and Mics is why was retained earnings taken out?
He said he figured it out afterwards.
No,
After the fact.
but I don't know I don't know what he figured out. But why was that taken out? And why is bank recapitalization so important to everything that you've basically just described? Why was it such a very important one? In fact, it was one of the major decisions that was taken last year. Why?
I think Tunji mentioned it right. The growth and all this stuff we talk about, lending to households, getting credit up, firing the economy, SMEs getting access to money, depends on the stability and the robustness of your financial system. Now, if you do not have well-capitalized institutions that can withstand not just the ability to just lend and all that, but then things do go wrong. I mean, this
These guys
is
have like shareholders' equity 2 trillion, 1
and
trillion,
then
like in trillions.
And
So
again,
I mean,
again, nobody is saying you must have more than is required. There's a minimum threshold. Just go meet it, okay? Because the robustness of that system is critical.
Yeah.
When we finish all this stability work, which we're getting out now and getting to that growth phase, to his point, it's not a CBN that's going to be doling out money to someone to go and finance a road from Sokoto to Badagry. No. Let the banks go and do it. Now, if you look at the size of our banks, even with all this capitalization, still very, very small. Right? Again, yes, we're coming from somewhere, but at some point you need to get that thing out of the way. And then you look back to what has happened. So when the thing was announced, 2023, was it late 2023?
2023. March 2023.
Folks did not see, and I'm not sure anybody saw this coming, but just look back at what has happened since then. The FX crisis, right? Rates had to go up to incredible level, right? The NPLs you're seeing feeding through the balance sheets of banks now, right? If those capital buffers were not there, we'll be talking something entirely different, a completely different set of risks that you cannot afford whilst you're fixing macros, right? So again, all of these things are well thought through, well debated, and people seem to think that, maybe in the central bank, people just make decisions and do stuff. Trust me, the opposing views that are in that building. I remember when we were doing IMTO spreads on FX and all this thing, trying to remove it. We almost came to blows in the office because there were people on the other side who was like, no, you cannot do this. How are you going to recognize this? Blah, 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 blah. And they're all very, 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 very strong senior people who believe in their own way of doing things. And that's the beauty of it. The debate happens, then the best rise to the top, and then we'll take the decision, right? And then let's see what happens. If it works, great. If it doesn't, we roll it back and reverse it.
I think that's the exciting thing for me. I really just wanted to know because honestly, the CBN doesn't have to appear to be boring right now. It is very boring, which is a good thing. Good thing, right? But ultimately, there are people who have growth expectations. I just want to know that somewhere in the thinking of this whole thing, there is some growth mechanism into all the
For sure.
calibration.
So again, just to share some color, right? So a couple of weeks, probably a month or so ago, there was a huge symposium, whatever they call those things we had in the building, which had the Ministry of Finance, the Ministry of Trade. I think it's called DGAS, disinflation. You heard about that, right? Growth acceleration something, right? Strategy or whatever it is, right? And look, the thinking behind that is, look, now that we're kind of confident that, look, this stability thing, FX interest, let's start thinking ahead. And collectively with all the stakeholders, how do you begin to then, not by talk or by noise or something that is visible, the plumbing, the invisible stuff that you guys will never see, that needs to be done to make sure that businesses can thrive, to make sure that access to credit can be fixed, to make sure that, right projects can come to the top and get financed, make sure government can take equity in this or whatever there is. So crowding developmental finance, blended finance, all sorts of things you need to do. So again, a lot of that work is going on But it's all behind the scenes, unfortunately. But it is, you can be rest assured, a lot of that work is going on.
So
Look,
is there a challenge?
the first DGAS paper that I saw, my good friend, when he has this, he's going to laugh because we laughed about it. It's about 90 something pages. It was very thorough. Like across I can guarantee you, there's nothing you guys are thinking about that is not in there.
It's probably the most thorough.
By the way,
and
guys, sorry,
coherent.
sir. By the way, we would open up so that if you have questions, we're going to take a couple of questions. Maya will take a couple of questions here as well from
And
the
I think
audience.
we're very focused on execution, right? So the governor says this all the time. Look, I'm not here to just talk or win friends, right? Look, if I say something, be rest assured I'm going to do it. Once you hear me say something, you can take that to the bank. Because we're all about doing, because that's how you build trust and confidence. Look, if we do not have the confidence of the markets or the people, then all these reforms and all this going on, if nobody believes it, then people are still going to buy FX and be storing because they don't think you're serious. I mean, it took them a while, but now, if you like old dollar, that's your problem now. Because you're losing money either in the carry or you're going to lose money in the absolute rate, right? Because ultimately, you can see that maybe these guys know what they're doing.
Yeah.
Maybe this thing is moving in the right direction. And that then reinforces, the whole market flow. I'm taking it back to FX because if you look at the quantum of flows we see now from Nigerians, domiciliary account holders who are converting their dollars to Naira.
Really?
It is, the first time I saw the number, I didn't believe it. Again, so there's a lot of noise in the data, but the direction is obvious, okay? So I called a few banks, bank treasurer friends. I said, look, I'm just checking something. Can you tell me, on average, how much DOM accounts conversions do you see? Some get as much as $200 million a week. One bank.
What?
One bank.
As in converting dollars?
Yeah, to Naira.
That's big.
It is.
That's big.
Look, the headline number that we see, aggregate, again, bit of noise in it, between $1.6 to $2 billion every month. So when we tell you that the FX market, we're seeing flows on average now of about $8 billion a month, we're not making it up. It's actually happening. The data is out there. When we tell you that, guys, FPI, yes, but there's a lot going on in this market from the more traditional diversified sources that is giving us the confidence.
NNPC remittances.
Look, NNPC, remittances, like export. Look, another.
Do we still need oil?
Can I
though,
just,
Mario?
if you don't mind,
Do we still need oil? Is oil still a major factor in exchange rate stability?
I can't. This is live, right? I don't think I should say this.
It's not live, no worries.
no, it's not edited though. So,
So no, it's fine. It's fine. So I think oil is a problem in this country because we're all, even for me, all of us, we're all stuck on this thing that oil is the thing that saves us. But when you actually look at the data, and one of the reasons we're not saying this so boldly yet is because we're still interrogating that data as to what's really going on there to make sure it's right. But again, directionally, take a guess. In the official data we have, what percentage of FX flows to the market do you think comes from oil?
20%.
40%?
20.
40?
I'll say in the middle 30.
Tunji?
25?
Less than 20.
Wow.
I'm
Now,
not surprised.
Less than 20?
even if
This is recent.
No, I mean, and it has been like this for a long time. Look, this is the interesting part. Okay, now, the first time I saw that data, I was like, this doesn't sound right. I mean, oil is everything Nigeria exports, blah 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 blah. This thing we've been told all the time. But when you actually dig down, look at our GDP composition.
Less than 40%.
Right, oil is shrinking. Look at now.
Exports is less than
Export
50 now, right?
Share of government revenue coming down. So all of it, which is all great. Now we need oil to boom, and more of it, the better. Don't get me wrong. We still need it to flow.
It's more of it
But-
the better because there's also the counteracting effect on inflation through
exactly.
PMS, right?
So, yeah.
But again, even that. So I had this chat with the IMF chaps the other day. They were talking about, oil. I said, guys, okay, think about it. If oil goes to 20, okay, great. I'll probably suffer on the revenue side. Okay, but it's a smaller number. But the impact of that on consumption is huge because PMS price is definitely going to fall through the roof, right? It's going to fall down.
It's going to fall, yeah.
fall right? Because again, the prices have come
Well-
down. Now, depending on how much of an FX move you have to make for the other side. But if we know that flows are coming from other places, then look, again, all of this is theoretical. The way it plays out practically is timing, sequencing, and all of that thing. But what I'm trying to say is that oil is important, but it's not. Nigeria is not an oil story anymore. That thing is a message. Nigeria is not oil about oil. Look, we need the oil investments. We need the flows to come in. Please invest in gas, renewable, all this, fire all this thing away. Great. But there's a lot more about this economy that people often overlook. Yeah. But the people that don't overlook it, right, are the guys, the guys doing these businesses. We're looking at some data. This is my last point. Non-oil exports, right? Now, cocoa, classic one, doesn't get intervention. Nobody, just leave those guys alone. They've worked this thing out. Post-reforms, 2023, 2024, and this data didn't come from us, it came from offshore. Some guys who where do the major cocoa buyers source their cocoa from? Do you know that Nigeria exports, if not more, about the same amount of cocoa as Ghana?
What? Where is this data?
Because we all know Ghana, Cote d'Ivoire make up 67% of.
Again, even if that, and this didn't come from us, that's why I put it out there. It came from people who are buying it globally, okay, from Asia, Europe, and all of that. Some smart guys in Eastern Europe, right? That's interesting. Now, according to these guys, in dollar terms, we grew cocoa exports 150%, 2023 on 2024, Nigeria. Now, how that is not the thing we talk about the most beats me.
We don't know.
We don't have the data.
Which is the of the matter, right? Now,
we are not good at telling our stories.
And I'm telling this because when I made that point about oil not being Nigerian, people kind of go, yeah, he's just talking. But these are the realities, right? When people come and say, oh, you need to support this industry with cheap money, but I say, look at the cocoa guys. Yeah. Now, I know a few cocoa boys. Now it makes sense. I'm like, this guy has been looking. So now I'm like, okay, and then you ask them, oh, of course. So these numbers are things are booming. I mean, with the competitiveness of the currency, right? The quantum of guys would quietly now from the macro side, from the public sector side, we need to do a much, much better job of capturing this data, right? Such that it can begin to, again, reinforce all these narratives. But more importantly, that policy can then begin to see, okay, this is what you need to do, this may be not what you need to do, and all of that. So Nigeria is, I think someone said it on your last show, right? It's
a recovering asset, yeah.
So it's being sold as a distressed asset, but it should be a recovery asset. That's what he said.
I think it's the country has got just so many levers to pull that not many sovereigns have got those many options.
And they're not coming together.
If you can just take a high level, right? Because I don't want us to get stuck in the weed. Because this period looks, in my mind, a lot like 2002, 2003 post initial Obasanjo. In fact, I've gone to read all the IMF Article 4, and the similarities are glaring.
Nothing new in Nigeria. Agree.
Right. So the question that we keep asking in the office and most of the work that we're doing is, we see steady state growth under current macro conditions of 4.5, at best 5%, unless something materially changes. And then we go back and try and look at that period and say, well, what drove
the growth?
That growth, right? And there were two things that struck us. Number one, oil price went from $9 to $120. And number two, there was massive fiscal space, which we don't have this time around. So in your mind, right?
What's going to drive the growth?
What's going to drive the growth?
The real work, which is again why the last 2 years are quite important. So in the past, we've always had something to your question, why didn't we take, I shouldn't be answering it, but this is my personal view, please, okay? When the whole conversation around IMF, all this thing came up in, I think maybe Q1 last year, it was heavy, right? And even the fund were literally like, guys, all you need to do is just ask for it.
You've taken all the medicine.
You've done everything we're going to ask you to do. Just actually, I think someone, I'm not sure whether it was the minister or the governor, said something, if you collect this money, you see this reform thing, he's going to abandon it because I on the phone. I shouldn't say this. God, my wife warned me when I was coming here. Don't go and say what you shouldn't say. But I mean, I'll try and so it was like, look, you get that cash of 11 billion, 9 billion, whatever number it was. then you then stop doing the hard things you need to do to make sure your economy kicks. And I think that is what is
Creates a
different this
moral
time.
hazard, basically.
God, please let oil prices stay around where they are. Because if they go back to 100, we're going to get so much money, people start misbehaving. Right? Now, the lack of fiscal space is forcing projects into the private sector. So you speak to anybody in the Ministry of Finance now, all they're thinking about is, okay, PPPs, whatever name you want to call it, this project needs to go. How do I crowd in private sector? And then to bring in private capital, you can make sure it's structured properly. Someone has to monitor. There has to be a performance. That not like before, CBN, just give them money, go and build this road, and then nobody does anything. And then because there's no accountability, you get away with it. This is the importance of having markets that work, because that puts you in check by default. And hopefully, this gets to a point where everybody just understands that this is stuff that you don't mess around with. You can go mess around with anything else. But this markets thing, because the whole economy is tied to it, and we've seen how bad it can get when this thing gets abused, just leave it alone. Because that is the natural check and balance you will always get. People will talk with their money. And if you know you're susceptible to market forces and people, then you behave yourself so you don't piss them off, right? And then you try and mitigate those risks as much as you can, build your economy, get the long-term things in place and all that. So that, I think, is the way to look at this thing going forward. Is Nigeria hunky-dory, out of the woods, everything is great? Of course not. Look, everywhere you look, there's elections coming next year, excess liquidity, all sorts of things that may challenge the macro, but nothing as bad as what we've come through in the last couple of years. Okay. And if you stay the course, you'll be fine. You need to get lucky, and we've been lucky a few times, but you got to do it. If you don't, these things just keep, and a lot of folks on the streets do really not, and again, you don't blame them, right? They don't feel these things the way we do in the markets and all of that, but ultimately, this is what eventually trickles down, because you get this stability stuff, macro thing, markets functioning, people then begin to invest. You invest, you then be able to employ people. You employ people, you can produce. You produce, you can export. You export, you get FX, it comes back. It not just so remittance, someone is working in London, he sends money home. That's great. More people should do that. But you need people to actually push things out to come in. And you speak to the guys in the Ministry of Trade. I mean, Dr. Tuwale's got a good set of people around that who are looking at these things, right? Of, okay, the smaller businesses that are exporting, across Africa, AFCTA, to Europe, to the US, the tailors, the creative chaps, and all of these things add up. So when you look at the dumb accounts conversion I was talking about, you will find that a lot of that number are these little guys that are not showing up as exports, but they're just doing their own thing quietly. You don't come and disturb me with your policy. I want someone to buy my gown or my agbada. I've sold the thing, I've collected my $70. Leave me alone. So a lot of that is going, we call it informal, but it's not really informal as much. It's actually trading that is actively going on. I've got another story about West Africa, but I'll...
All right. So hold on, guys. If you keep going, we're gonna.
I don't like the fact that he's making us believe us.
Hold on. We're gonna allow. Hold on, guys.
I'm the one asking questions.
We have time constraints, so I'm gonna allow you guys to ask one question each, and then we'll go to the audience, and then we'll come back because Mayo is short on time as well. Yeah, so quickly we'll start with you, Arnold.
Can we do some forward looking, right? So can you give us an idea of...
These guys are trading.
I know just wants to make money, but that's okay.
Right?
Go on.
Go ahead.
Like,
He wants to put money somewhere. He's done gold this year, so he knows gold is not happening next year. So
FX outlook, or do you have a price? And in your price, no, we don't. With your in-house price, is the current price overvalued or undervalued? And then NPR outlook 2026.
So
we have him here, right?
Maya, hold on. This is the wait. No, that's fine. I want you to take all the questions, right? So that's yours.
Okay. Right.
Sam, what's yours?
Actually, it's a simple one. Where do you think structural inflation is?
What does that mean? See, I'm not a clever person.
So what I mean is that at what point do you think monetary policy becomes a blunt tool in driving inflation lower?
Okay. So Tunji,
I've asked my two questions.
All right.
Already,
So
Look, FX outlook, you need to do the work, okay? Now, we don't have, and I don't think there's anybody in the central bank who's got an FX rate. Honestly, we don't discuss.
I heard through the grapevine that CBN uses 1,200.
That's bullshit.
Okay, just checking.
No, it's okay.
We do cross here sometimes. All right,
Great.
If it's bullshit, then it's bullshit.
So look, there is. You speak to. We've got like 400 PhDs in the central bank. They've got lots of them, right? You line up 6 or 7 or 10 of them in a room, and they're where all these funny acronyms about the real exchange rate, effective.
Really effective exchange.
They're going to give you 10 different answers. At the World Bank and IMF, you get more confused. Okay, because everybody has an idea of what this thing is, which is okay. And again, respect to all the academic stuff and all that, and they have their purpose. But look, I'm a markets guy, all right? The rate is exactly where people are willing to buy and sell the thing.
Correct.
Okay?
I always
Now,
say that.
If you make yourself attractive, you're going to get more. If you
Price
mess it
is
up,
different from value.
It's really that simple. And every other thing just follows those basic principles in my naive view. And please, I'm a very naive guy. I don't know about these things as much as
You're the brain, man.
I'm just a trader.
You're one of the brains.
I'm just a trader. Where the market wants to buy money, that's where the price is. Now,
Yes.
that is the approach. Let the markets function. And we're trying to refine our comms now to be much more clearer as to, so when we say stability, for instance, right? It's often misinterpreted that, the rate is going to stay the same, it's stable. That's not what it means. Well, that's not what we intend.
It's volatility.
It's about, let's make sure we don't have those volatility or those mad swings, right? Because people need to understand that, look, but if fundamental dictates that your FX go to 2,000, so be it. Does it dictate that your FX go to 500? So be it. Your economy needs to support wherever your exchange rate is. Now, personally, I think a country like Nigeria, an economy like this, needs a weaker currency over time.
Yeah.
Because that's how you encourage your businesses. You need to be competitive. Right? This is what China did for decades, right? And it's not by accident. So, but you need to make sure now, whether that is at 1.5 or 1.3 or 1.5, I don't know. But at any point in time, I personally feel you need to have a competitive currency to give yourselves a fighting chance. Because the world is very competitive, and you need to make sure you give yourself some things to win with, particularly with AFCTA, Africa. Look, we need to be the low-cost producer for the continent. Now, a lot of things need to be fixed, to your point about structural, okay? Now, but again, that is well recognized. And look, the governor said it a few times. This monetary policy stuff, orthodoxy and all these things, we're just buying time. Because you're naturally the first ones that can get through the door and just calm things down. But if the other stuff doesn't kick in, it's all going to reverse. It's no magic. Because it's not like we didn't have any money to print. Are you going to go back to printing money? Of course not. Otherwise, you destroy your credibility. So you got to make sure the real economy begins to kick in, and that's fixing all this structural stuff. In fairness, though, when you look at what has happened in inflation this year and even to an extent, especially food prices, a lot of that work has come from the fiscal. When I say fiscal, it's not Ministry of Finance, so the economic team, the agri sector, security. A lot of good things have actually been happening to encourage production, imports where it's required, to make sure food prices stay down. There's nothing wrong with that. Now, you got to, because again, ultimately, what's the point in saying you want to promote domestic stuff when your prices are the most expensive in the world? It makes no sense. Then you're literally going to keep this cycle going forever. So a lot of stuff is well recognized that there's structural issues, right? The infrastructure development you're seeing across the country. Look, again, we play politics with a lot of this thing, and I'm not a politician. I don't like politicians, right? But there's a lot of sense behind it. When you're going to look at it very, very closely, you see these things are being done to actually either facilitate trade, movement on goods and services, get farm produce to inland. So again, it just takes time, right? And because we've been at this thing Nigeria has been messed up for 40, 50 years, okay? Nobody has paid attention to these core things that could fundamentally restructure your economy. So don't expect it to happen in 2 years, more or less 5. It's going to take time. So, but all of those things are happening. And look, I know people who were in Ministry of Power, Ministry of Finance, all private sector boys who came in from doing things and sacrificing every day to make sure these things work. And not getting paid, by the way. They're not there for deals. Just like, look, because if we fix this country, we'll dominate this continent. Because Nigeria is where you know this, right? You guys see this in the market.
appreciate
It's,
the quiet,
you sit there, look at the South African, you're thinking it's not your fault now. It's because our own country we can't move markets. Because that's why we need to fix this thing. And it's not just financial markets, it's power, it's infrastructure, it's oil and gas, it's all these things that we need to fix. And believe me, there are people committed to doing that work and are doing it again. It may not work, but at least we'll try.
Yep.
Sorry.
Audience, please. Who's with the mic?
Please now.
Who's in the room? You said you didn't have
So,
questions
I am
now. We
sorry,
had
it
out
came
of
to my
time.
mind.
Okay, ask your question quickly while we give the
All right,
mic.
so I want
Please,
to
the mic
quickly
to-
ask. I do know. I've seen a couple of. I've seen a couple of photo ops with CBN with fintechs in Nigeria. It does feel like there's some sort of collaboration. But I need to say something also. It does feel like the policy around POS and specifically open banking. I don't know. I'm not sure if we're going forward or we're going backwards. Because I've followed inclusion for the last maybe 20, 25 years or so, financial inclusion. And I believe that we have seemed to achieve it to some extent with POS terminals. It feels like Nigeria wants to use mobile money. But my question is really, what is the central bank's outlook on POS terminals? How does the central bank feel it works in the economy of financial services and inclusion? And what does open banking play into that ecosystem?
So look, this is not my area, but I think I've got some strong views, and I know the guys running this space. The whole POS stuff is not as linear as everybody seems to want it to be. So depending on who you speak with, they've got their views about, this is how it should be, this is how it shouldn't be. But again, when you look at a thing across the whole system, there are things we've allowed in the past that they were just suboptimal. There are things that are now being fixed that may not make sense, but with time, it does make sense. But the overarching objective is, and to your point, those are the things that I know the governor does not compromise on. Look, financial inclusion is a must.
Yeah.
Okay? You must get this thing to as many people, to everybody, either via POS, whatever channel it is, right? People must be able to put their money in the banking system and take their money out without stress. Okay? Now, how we then achieve that is by collaboration, working with the industry players and making sure that we deliver this thing in a way that works. Nigeria is very, very, very complex. What works in Lagos and Abuja and the major cities does not work in Taraba and where the farming communities are. Like when you hear the stories about how point of sales are important to the agricultural sector, you almost like, okay, geez, you didn't think about that. But these are all on the table. So these conversations are happening. And I think the policies coming out now, when you think about things about geolocation and all of this stuff, they're deliberately to sort out those things, to make sure these things are seamless. And we will get there. It may seem slow, it may seem like a drag, but trust me, the governor chairs the meeting himself on this stuff. Right? There are two committees he chairs, by the way, operational.
Please, let's take Chica's question.
Sorry, this place is sorry, forgive me.
Time.
So this place is important to me because we are rolling out onboarding for pensions, personal pensions on POSs across the country. It's important to us that the policy, whatever it happens, does not disrupt.
Engage. Look, I can link you up with the chap who's my colleague who's and the director in charge of that.
Thank you very much.
Because we're very open, right? We talk to all these people.
Please, a round of applause to Tunji. The guy can know how to plug. All right, let's take questions from Chike.
Okay.
By the way, Chike, before you go on, just to mention that we have some, very important guests here, people who have been on this show before. So let me just recognize some of them. And on some of Nairametrics shows, we've got Chico Obianwu. He's about to take questions. He's a partner at Templars. Please, round of applause to him. We also got the beautiful Bethia. I can see Bethia just behind here. Bethia Idoko. She's been to, Bethia, is it 100 countries now? 99, still at 99. 99 countries, yeah. We also got, I can see Dr. Ayo DJ somewhere as well. Shout out to you. Right. I can also see the MD of Node Finance, Babatunde Dada. Shout out to you as well. And of course, I also got Robert Ejere, the co-founder as well. Shout out to you. And then I see Najib somewhere. Babarik, yeah, that's my guy. I see him there as well. And I see Ayo Olowokore somewhere there. I saw you pop in case you think I saw you. Yeah. Shout out to all of them. Please, the question to you, sir. Bjorn is here as well. Oh, where's Bjorn? What? What's Bjorn doing there? He came late. Oh no, Bjorn is a regular guest on Drinks About. Shout out to Bjorn as well. All right, Chike.
So I'm intrigued by Mayokun's comment on the contribution of oil to the economy and to the FX flows into Nigeria. So just to click on that, is it that the contribution of oil has shrunk in terms of real numbers compared to the rest of the economy, or is it that the rest of the economy is actually growing?
The latter, yeah. I think there's
And you said something about the trend. Is it recent, or how long has this been going on?
So look, I think it's a case of the rest of the economy is now beginning to show up. And again, that can be explained by, depending on how you slice data. Look, and I want to make the point about data, right? We have a data problem in Nigeria, okay? We just don't collect, analyze, and use data enough, right? The way we should. And a lot of it is just because people just never paid attention to these things or whatever reasons. And that's one of the work we're doing in the central bank as to how do you just make sure the primary data we collect is something you can use. So if you ask someone for it, they'll go figure it out and come back to you in 2 weeks, right? Because that's just how long it takes to mine and get it all together and make sure it's correct, which is just not good enough. It's about how do you get it on a dashboard real time. Okay, and we've got the system, the technology to do that, and all of that is work in progress. So hopefully in the near future, you will begin to see a lot of real-time data being popped out from the CBN just by the mere fact that we're just better at gathering and analyzing this stuff. So that's one part. Now, to your question, right, I think the rest of the economy is doing better. I also think a lot of it might be explained that post the reforms and normalizing of the markets and a lot of things beginning to function better, a lot of stuff that just weren't reported are now getting reported, right? So you're getting a clearer sense of what is actually going on. But when you sit on the desk as a trader, right, you sort of have the gut feel about this thing anyway, because you're like, okay, there's no oil company selling, but there just seems to be FX around. So in the height of the crisis, by the way, when people were 450 official, there was an official at 300, another at 450, another at 600, then the black market was 750. It wasn't like people couldn't find FX. It was just so there was always liquidity, right? So, and to tell you that a lot of these things were happening anyway, people were exporting, they just weren't reporting, they just didn't care about your system, right? Because they had incentives and there was enough price arbitrage for them to do it outside. So, and I think with the beauty of the normalizing of the markets and all of that is that a lot of these things are now coming in, so you're able to see them better. The next phase is that you then make sure that reporting is a lot more detailed, right? So that you can then use this in a way that you can talk about this thing boldly. And like I said, I think I made the point. I'm a bit hesitant to talk about it boldly because the headline number, the overall number is correct. But if someone pushes a lot on the details, I might go, okay, maybe let me get back to you, which is not what you want. That affects your credibility, right? But and a lot of this is work in progress. So we had a thing about, sorry to go back to FX, about net reserves last year where people were good. Look, we always knew what the number was. But the problem was, if I gave it to you today, and you ask me the question again next month, the scary thing was, I may need to revise the number I gave you the last time. Not because I was being dodgy, just because something else has cropped up from somewhere. So we're like, guys, please, just go fix this thing. Let's make sure we can get this thing out in a way that we can talk about it consistent. Because if you give a number, you change it, good or bad, it just burns your credibility. And at that point, we just didn't have many of it. So we had to be careful. So it's about how do we just get these things reported better? But be rest assured, from the aggregate data we see, flows in the market, we analyze everything going on. There's just a lot of good stuff. The surprise will always be on the upside. It's just going to be, because I think it was one of the ratings agencies, and the lady was like, I think it was Moody's or Fitch, I can't remember which was. She was like, Nigeria is an interesting country. If I pick up a piece of bad news on the wires when I wake up in Paris, right, to corroborate it officially takes me maximum 2 phone calls, right? Oh, pipeline explosion, someone got this thing, someone got fired. Oh, people are quick to tell me, yes, it's correct, it's official release. Now, if I pick up a piece of news that, Shell has invested $3 billion in Nigeria, which is big. Jesus. to find someone to confirm to me.
Hold on, let me
It's
check.
not just a Nigerian problem. I mean, I spent most of my career in emerging markets, and the locals are usually very pessimistic on
To
their
find
around.
someone to tell me
Only
that,
the
okay,
Indians are not.
maybe this is positive. To find someone to actually tell me that this is even partially true, almost impossible. It's like, I'm the guy who's trying to help you write a good story. Shouldn't you be throwing all your good news at me early? So again, we're doing a lot of work now
Nobody wants to be quoted.
on investor relations, setting up that institution.
Somebody else
There's
about
another question for you,
FMDQ.
Mayo.
Someone asked
this
about
one,
FMDQ.
Go ahead.
Okay, good evening, everyone, and thanks for the wonderful insights. Really gained a lot.
Name as well.
My name is Dr. Ayode Jebo. I would like to find out how the synergy between the fiscal authorities and the monetary policy authorities, and such that you are not playing catch up, because no matter how interesting some of the things you are doing, trying to stabilize the FX, if the structural issues from the fiscal side are not actually handled properly, then you would just be moving
Yeah, I
the
agree.
needle just to catch up. And what kind of synergy do you think currently exists, so that when you are trying to see how you want to bring down interest rates, one side is not trying to see how they want to raise as much money that will make interest rate go up. So I'm just trying to understand
Yeah, I
that
agree.
synergy, because it's important for both collaboration for progress. Thank you.
So look,
Mayo, hold on. There's going to be another question. One more question, and then we'll wrap it up. There's somebody else. All right.
All right. Good evening, everyone. My name is Oluwadamilola, and I play in the energy sector.
Great.
So I wanted to ask, particularly with what you said around the contribution of the energy sector, I wanted to ask how, one, the Dangote effect plays in, seeing that a lot of the crude is not being exported anymore, so you don't count it as exports, as well as the loans that are on NNPC's books that do not count as exports, because the volumes that they go out and then there's no revenue that comes in on those books. So how those things contribute to the number that you see. And also just look at, for the 2024 NNPC financial numbers, I did not hear anything from Nairametrics, particularly on that. Just to hear, because for 2023, there was a lot of emphasis on this, they spend this on that, spend that on this, and for 2024, there was nothing. So just to get your this thing, and I might be biased because,
all right. So thankfully, I'm not. I don't pretend to be an oil expert, and I actually, I'm not sure I have the details around that. But again, I can talk directionally and what's happening in the macro. But I'll take his question first around the coordination, right? So, and this is something that has almost become like a cliche, right? Oh, coordination between monetary and fiscal. When you ask people, okay, what exactly does that mean? Right? And then people just waffle and go round and round in circles. Because, I mean, ultimately, right, I don't think the governor of the Ministry of Finance or Ministry of Trade, they exist in silos, right? They do work together. There's an economic management team that meets monthly. If the governor is not there, the deputy is in it. Minister of Finance, Minister of Trade and Industry, Ministry of Commerce, all the guys in the economic cluster. And these things are not just talk, because everybody understands that, look, even for their own political, what do you call it, right? Well-being or existence, the country needs to work, right? So nobody messes around with stuff like this, right? So and I'll give you a clear example, right? When we kind of said man was like, listen, all these fiscal interventions and all this stuff is not happening anymore. Even forget that. Even talk about ways and means, all this monetary deficit financing, they're not doing it again. Look, again, who gives up access to free cash easily? Especially as a politician? Of course not, right? But again, everybody understood, from the president, the Ministry of Finance, that look, this was a no-no, and it's been that way. Now, the amount of conversations I have at my level with my peers across the economic cluster, even oil and gas, it's quite incredible. So there's a lot of coordination, because I think we all generally believe that it probably would have been different if all these monetary reforms and all these things went pear-shaped, right? And the whole country had blown up. Maybe they would have kicked all of us out, and But thankfully, folks now see that, hey, all of these things is good for the sovereign, right? And everybody is now kind of. So we've got it. So the coordination is I think I've not been around for much long in public sector, so it's probably as good as it's ever been. But I know there's a lot of interaction. Look, our inflation targeting framework as we transition requires a lot of, just by default, right, engagement, because you cannot set inflation targets as a central bank. You're wasting your time. It needs to come from the fiscal.
Was that response
They need to tell you, okay, this is the assumptions. Yeah, it does. Well, jointly at best.
Okay.
This is our assumption. This is where we want to grow. This is what we're trying to do. Blah 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 blah. Then okay, what does this mean to? And then we agree. This is the band we're going to hold it to, or this is the actual number, and then we'll take it from there. And we're moving to that over time. I'm not sure when that is going to roll, but it's going to take a while. So but definitely unsung. Now to the stuff in the oil and gas, and a lot of talk around the impact of Dangote, what's happening in the whole, energy sector and all of that, and what it means for FX, what it means for government revenues, what it means for our outlook in terms of economic growth, balance of payments, and all of that. And I think my simple answer to this is, whichever way you look at it, it's positive. Right? Whichever way you look at it. So if you argue that, Dangote is now producing petrol locally, is creating jobs, blah, 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 positive, okay? If you argue that we're not importing as much as we used to import and then drain on FX and that may not be particularly true, by the way, but anyway, if you just start the argument you want to take, fine, positive. If you want to argue that, now we're exporting all sorts of byproducts and from this, again, positive. And again, the answer is right before our eyes, guys. So when you look at the composition of our trade statistics, and I think MBS released one a couple of days ago, it tells you what is going on. And we started with an investor in London a couple of weeks back. And the guy was like, he's intrigued about how structurally Nigeria's BOP has changed. And it seems to be lost on a lot of people. That our import-export dynamics as a country is actually altered. And except someone mad,
explain that? Like, how is it
except
altered?
someone mad decides to go back and start subsidizing petrol, right? And so that thing was such a big mess, right? And to your point about debts on NNPC and all this, that's where it all came from, okay? And that has been now gone and hopefully gone forever. Even if they owed people money for the past 2 years, if they haven't finished paying now, at some point they will finish, okay? It's less today.
It's not
increasing, okay? I think you stop bleeding. Now, what that does to your import-export dynamics is just incredible. Is that you're not spending as much dollars, resources I used to spend before to import, right? You're locking that in. Now, you may claim that, Dangote is getting crude in Naira, so you're losing FX inflow at the top. Yes, but the impact of the imports on your FX market alone, just the timing of it, is such a huge positive. Now, the reality is that because NNPC used to do these swaps, a couple of us were analyzing this a couple of days ago, right? DSDP, whatever they used to call the swaps, right? It sort of confuses the data a bit, but if you deep into it properly, you will actually see that, okay, this is an interesting mix that is happening. So crude versus product, that is feeding downstream into our balance of payments. And you're seeing that surplus building more and more and more and more. More so because, again, nobody is taking cheap fuel from here and taking it across the border anymore, right? Because the pricing difference just makes no sense. So all of that is helping because a lot of the waste and the arbitrage, same as was with FX, it was with the oil.
You can see it in the data because like quarterly goods and services import has gone from like 24 billion a quarter to 14, 15 billion goods and services.
And at worst case now, it stays at that 14, right? It's not going to go back to 24. Yeah. So that is... You've locked down that baseline, and then anything else is a plus. So again, but it will take us time to actually see that in the data set, and then people begin to. But the early movers get this thing. So but people are betting.
The paradox was the balance of payment adjustments and the balance of payment structural improvement has been ongoing for a lot of quarters now. And the challenge that I've always had was the link between the balance of payments and the reserves accretion. That was broken. But it seems that is
that's back down. Yeah, that's now beginning to see. So you're seeing reserves going up. Again, so there's a lot of noise in the reserves data. Because again, we talk about it, right? The quantum of liabilities and encumbrances, and when the governor talks about the structure of our reserves, right? and the guys in the market know this, right? Because they're getting paid back all sorts of things they were doing before that were just legacy stuff, right? And the quantum of that this year alone, if not for that, yeah, the results will have been another couple of billions properly up, right? Because now it's just pure stuff. It's like proper accretion, proper flow. And it's not happening because we're consciously going out to say, oh, let's build reserves. No. The flows are now coming in, it's just beginning to all this. So, I think it will take us a while for these things to settle and people will not look back, oh shit, something happened in 2023 or 2024 that has structurally changed the way this data is behaving. And that's really how you want it to be. So long may you continue.
All right. Thank you very much, Mario. Please, a round of applause to Mario. Before you go, Mario, just two fire questions that I know that a lot of people might want to know. And this is questions to you as Mayo, not as Mayo with CBN or whatever. So Mayo, if you were, buy, sell, or hold. So buy typically is yes, sell, no, hold is your neutral. So if I was to ask you, buy, sell, or hold, the exchange rate, I know you're tired of exchange rate story, but everybody wants to hear about exchange rate. The exchange rate would strengthen. I'm trying to give you an easy way out. I don't want to put a number to it. Will strengthen further in 2026.
So
everything else being equal.
I'll answer you in a different way, right? I won't put it.
It's buy sell. Don't be like Tunji, please.
So I'll tell you something, right? So right now we've got at the lowest point of the curve, 20% yield on Naira. Okay? Mm-hmm. Let's even bring it down, right? So dollar rate is in. So you've got 10% carry there, however you look at it, right? If you take 1450 as a point we end the year of 1400, wherever the markets end up, right? What's 10% of that?
10% down.
Yeah, add 10% to that.
140 plus 14.
That's
1560 or thereabout.
Now, do I think the FX is going to go to 1560? Hell no. Except there's an external shock or something, in which case we're all buggered anyways. But in the normal, I just don't say it. So even if your play is, hey, I'm holding this and I'm edging myself with the yield I can get or the return I can get on my Naira assets, then it's just a no-brainer. Because you need to lose 10% in the FX for you to absolutely lose money. So if you keep that money under your dollars under your pillow or invest it in 2-3% you get on a dollar, it's not going anywhere. So
the bets on the Naira then.
And then to the point we make about the balance of payment constructs and how the macro is improving and things are going in the right direction. It's exactly what has happened this year. Look, the FPIs get this, okay? Yeah. I've got people trooping in and out of my office. I'm on 4 or 5 calls a day. And this has been happening since Q2 last year. I mean, boys, you know this, right? People cleaned out on this Naira trade. I mean, we see their thing maturing, trades that are maturing now. I mean, guys are making 40% on the dollar.
What?
Yeah.
Because again, it's obvious in the marketplace. It was open to everybody. It wasn't anything special. Because we all could. I remember calling him first time I saw this show.
And then he took a loss.
I told him. I said, wow. The way that guy's like this, I hope he's got money on that trade. Because he was, again, there was a risk in it. It could have gone, Trump could have blown everything up. And that's market, right? That's the risk you take. But it was, I wish I had
another question, Mario, before you leave. Last one. So where do you see interest rates next year?
Lower?
Where do you see it? Do you see it going down? Lower?
Yeah.
Way lower?
500, 300, 400.
No, look, inflation is trending down. We're very convinced the trajectory of inflation is embedded, is well entrenched, and that is going to keep trending lower. Look, there's a king coming in data in January, which is going to go up and going to come back down. That's just statistical because of the rebasing, but that's going to happen. But general direction of inflation is going lower with real rates. And again, depending on what you pick, right? So when you say interest rate, MPR, treasury bill rates, so the market has already adjusted. So treasury bill rate is already at 21, 22-ish.
But lending rate is still 35%.
Yeah. So what is now beginning to happen is, and this was to the point we were talking about earlier about the what we're doing on the OMO side, how we're mopping up liquidity. So if banks can get 22% overnight, yeah, okay, fine. They'll pack all their money there and not do anything there because it's just economies all over the place. They're adjusting their portfolios and all of that. But as that begins to normalize, a lot of corporates now are issuing And it starts with the big names first. CP market, where is it now? 21, 20%?
Yeah. Dangote cement and all that.
So nobody is telling the banks to go and quickly start repricing. And he gets there eventually. He just, because again, once the macro adjusts, everybody, the early movers do it. The guys who don't believe it will catch up later. You choose which side you want to be. But rates are definitely trending downwards. He has to. Because inflation goes lower, genuinely down to 15-ish sub. Interest rate at 35 makes no sense. If you stay there, good for you. Someone else is going to cut you out of the market. And then with digital, he was trying to make the point earlier. Digital is what I think is going to be the game changer. Because a lot of digital boys now are just greedy because they are just maxing all the spreads and making all the money on the lending side, not the savings side. Savings we encourage a lot. But a lot of the guys doing fintech, all the lending business, they're just like loan sharks.
Charging like 6% monthly and all that stuff.
Because, and again, they can get away with it. But ultimately, as the markets get a lot more, competitive and all of that stuff, you see that begin to. But that is the fastest channel to unlock this thing. So we're thinking a lot about monetary policy transmission. How do you get that? The policy rate itself, how does it translate to what the ordinary guy borrows money from banks, from the system? It's still a bit of a journey, but it will get there. I think this is definitely lower.
All right, thank you very much. That's a bye from Mayo. Another applause to Mayo. Before you go, for the gang, buy, sell, or hold, Mayo.
Bye,
sell, or
Mayo's
buy, sell, or hold.
Born by Ogada, so.
Don't come up with all your buy, sell, whatever. Buy, sell, or hold, Mayo, to the audience.
They're all
Bye, that's a strong buy, Mayo. Thank you so much, Mayo, for being on Drinks and Mics. Please, a round of applause to Mayo for being on Drinks and Mics. At this stage, Mayo is going to exit, and we're going to have Mayo and Sam is going to exit, and we're going to have Otunba, Del, and Uzoma on the stage. Thank you so much, Mayo.
He's grabbing his wine.
He's grabbing his drink. And Mayo brought his own drink, by the way, so. All right, fascinating. This segment, we're going to be talking about, I'm going to trust responsible to control the discussion because Tunji, Arnold, and Sam were very excited the earlier segment. So we're going to talk role of payments, consumer credit, which is a very perfect segue into everything we said earlier. And I'm going to start with you, Uzoma. So we've heard Mayo, we've talked about, wait a minute. I don't know. Who is this for?
That was pointing.
Because
I left it in my
Sam
jacket.
just brought his. Is this cigar? Is it
I left it in my jacket. So
you left it in your jacket.
This is the only thing this is the only thing they've not done.
This is the only thing we haven't done on Drinks and Mics. It's not yet allowed on Drinks and Mics.
No, I left it in my jacket. Sorry.
Drinks and Mics hosts like cigars, by the way, so except Tunji, but we do like cigars. We have cigar aficionados here.
Oh, yeah? Oh, we have to smoke together.
Drinks, Mics, and cigars.
I know. Let me hide it.
All right. For those who are just here, we've got Uzoma Dozie. Uzoma is the former MD of Diamond Bank. I'm sure a lot of us know Diamond Bank. They merged with Access Bank back in 2019. He's currently MD of Sparkle Payments. I use Sparkle. For those of you who don't use Sparkle Payments, I love it. All right, Uzoma, let's start with you.
tell you why he loves it.
Whatever.
Because
I love it. I just love that.
It's a great customer experience. I don't know what
I just love
there's
it.
a specific reason
Please
why.
ignore Tunji at your own. Ignore Tunji or whatever he's saying. If you haven't used Sparkle before,
has a
please use
special feature if you
Sparkle.
do not know Sparkle. So
Please.
you want to download it and express it.
Just use Sparkle. If you're one of those people,
We understand our market. Yes.
just use Sparkle.
Yes.
There's certain kind of transfers you want to make. You want to do it on Sparkle. Trust me. Chica is looking at me and wondering what I'm talking about. All right, so Uzoma, you had Mayo and everything that was said in the previous segment, and Tunji also earlier spoke about growth. And one of the things that we often talk about on Drinks and Mics is consumer credit and where that is going to. What's your take? Do you think the next evolution of all those reforms is basically, consumer credit, which is lending to retail, credit cards and stuff like that? And then, what role do the fintechs play in this space?
Okay, I think so. There are three players, and I think there are three key stakeholders in this game. there's your regulator, there are your traditional banks, and there are your challengers. Your traditional banks and challengers are constrained either by regulatory policy and also market conditions. Now, for your traditional banks, they are stuck in their ways. So they have some legacy situation that does not enable them to scale. Because if you're trying to lend to millions of people at a price point that is affordable, considering everything, you can't do it with people. So traditional banks are people and physically heavy. Now you have your new challengers. Now the problem that they have is that they are capital light and trust light too.
Yes.
From a regulatory perspective.
Yes.
And so you need, so now that's why I say there are three players. So for the traditional banks, the situation is, okay, should we stop lending? Because if you look at the numbers as well, I feel like Jesus Christ with in between two thieves because I'm with lots of corporate bankers and all you guys, all you think about is like that high end of the market, right? Yes. And yourself and how much you can make, and you don't think about the guy down the.
Yeah.
So when you look at, I've lost my train of thought now. So for the traditional banks, the cost of because when we were as you said rightly, when I started working in Guarantee Trust, we were new generation banks challenging the old generation, right? Yeah. Now we are by the time I was leaving Diamond Bank, we were the old generation being challenged. So the cost of changing your system, changing your people, and retraining people to go into an area where you're not even getting the right support or enough support from your infrastructure, the system, and the system in terms of law, the system in terms of the right regulation to take into cognizance that the market has changed.
Yeah.
You're reluctant to do that. Now, for the new challenger banks, is that I don't have enough capital, so I'm not even going to bother trying to lend to people at that level. I'm going to lend to people that where I have their information, there's the proper infrastructure and everything. And if I'm going to lend to those people, the rates have to be crazy.
Yeah.
Right? And so we need a meeting of minds. And so when we started our own organization, was like, okay, you know what? We're going to blend what we understood from traditional banking, right? And what we know about technology, right? And say, okay, we're going to lend at the pricing of traditional banks, but at the speed of fintechs. But there's a limit that you can do that because first of all, capital is always going to be a constraint.
Yeah.
And so I'm excited about, and so in fact, when I was sitting down there listening to you guys, I actually was very interested just to shut up and just listen. And Mayo kept talking about, and yes, our CBN is actually more progressive than most African
central banks,
most European. But the problem is that commit to a time. It's like we're working in time. Is it in 2026, 2027, 2028? Because every other system in this ecosystem, we are all committed to time. Your shareholders are going to say, when are you going to do this? So it's for us. I think we're in a world now where it's not about how hard we're working, but the outcomes. So everybody has to commit to, okay, 2026, are we going to have open banking? Because for me, open banking is the real catalyst.
I thought it was launched in August, wasn't it?
Exactly. It was supposed to launch in August. It's not going to, it's the real catalyst to financial inclusion.
Yeah.
Because open banking is just about unlocking data. Unlocking data is about, okay, we're not just going to use, because today the problem is, okay, I've invested in the right type of technology so I can use non-financial data to make a credit decision. The problem is that because of the environment that we're in, so if you tell me you're going to bring me your financial statements, I don't trust it, right? There's a lack of trust. But open banking means that traditional bank ABC, you're giving me permission to pull that data. So all that 20 years of data that you have, that the other bank has, but does not have the capability to lend to you at the price point, I, with my light infrastructure, can do it to you tomorrow because all I'm doing is that I trust that data. because it is from a trusted environment. And so we need to get to that point. So like things like open banking are things that are going to unlock. So when is the time? So everything, so I heard a lot about everything, but mine is like, okay, let's commit. I know time is important. But if we say by half year next year, we're going to get this done. What happens now? People now think, okay, by halftime next year, let's start investing into that. So you get other market players coming to think, even outside investors knowing, because what excites people about Nigeria is not the consumer market, it's actually the SME market. Because you have a big informal market that is trying to become formal, but that cost of formality is more expensive than just staying in the background. So those are the things that we need. That's why it's a meeting of mind to say, how can we make this pie much bigger?
So there's this thing, right? And it's fantastic that you've been on both sides of the table. Almost every financial service industry generally is filled with incumbents who see every financially enabled company as, who are these jokers? Where are they coming from? Now, the the technology-enabled players see it as, we are coming to take over from these guys. The truth is that neither will happen. But the thing I have consistently seen, and it's not just in banking, it exists in insurance, it exists in pensions, it exists in the capital market, is that both will exist and continue to grow the market, just continue to grow the size of the pie. My question is, where do you think we can, because it continues to be that both do not trust themselves, while the fact is that both need to work together to grow their sizes of the pie. Where do you think we can come together in each industry? Where's that place? Where's that room that we all know that there's a mutual understanding that we can work? Because it seems to work in silos. It works in a few places. So if I wanted to scale a financial service technology now, and I need people who are in the audience to understand this, I almost literally need to go from bank to bank to deploy the technology with each bank in their own infrastructure. It's not like I can just go to one place and say, okay, I deploy here and it goes everywhere. I need to go to bank A and say, oh yeah, how do you people do your own? Or you do it this way. Okay, we'll now finish. Then I'll now go to bank B. By the time I'm done with that technology, I don't want to do any innovation again. Let's just stay here. But where's that room that we can all just easily meet and then innovate together?
And also to answer his question, because if you look at South America,
that was 300 questions.
because it links. Okay, let's hear it. So if you look at South America, you have the likes of New Bank, right? So New Bank have actually, so South America heavily, a few years ago, heavily informal, Peru, Brazil, and so on and so forth. And then the likes of New Bank came and they found a way to marry, they found their niche in terms of informal, but then marry that informal and formal work with other banks. So how are they doing it in South America? And what are they doing that we're not doing over here to get that marriage of informal, fintech, and commercial?
Okay, so let's be pragmatic, right? So when I was running the traditional bank, I also did not trust the market environment, right? So I didn't trust that everybody was playing fair.
Yes.
And when I moved now into a startup, we're definitely not playing fair either, right? So there's a lack of trust in terms of, and I know, in fact, I even believe that in this market, why it has not grown like other markets, to your point, is because there's an uneven playing field. So, as far as I'm concerned, central bank has a big role to play in it. Now, the first fundamental problem I find is that the banking licenses have not been changed since 1980. Technology has evolved since then. So, look, we don't have a digital banking license, but everybody claims to be a digital bank, right? So many digital banks are using MFB licenses, which were there for rural banking.
Yeah.
So first of all, there must be a comprehensive review about substance over form, right? License the act, not the form, right? Don't say, because the problem is that, and to be fair, if you take an MFB license, for example, that is 200 million, so that is the capital that you're putting to secure the business. So you're undercapitalized.
From day one.
From day one, right? Because you are doing more things that you should do with that license. Because that license for you was for this
Just this
local government area. Now I have people who can open banks everywhere. But meanwhile, that is the way people want to do business. So like you have to say, okay, let's look at the new license. What do you want to do? You want to do bank accounts across the nation? Do you want to do FX? You want to do XYZ? So today we have, if you want to be a commercial bank, you must bring XYZ. It's overcapitalization as well. So it also deters people from actually trying to do that. The third part is we have rules that people don't obey. And then we have governance rules that people don't obey and they get away with it. And you don't call name and shame. So of course it means that
could you explain
permission. Sorry, forgiveness is better than permission. So like you just go. So what is the penalty for this, and what is the profit in doing this, right?
Yeah.
And so that is your fundamental problem. The reason why these other countries are doing well is because first of all, they have up-to-date guidelines, right, that are in line with market conditions. And two, if you screw up, you're going to get done. But here, I'm in a market where I see things happening, and I'm just wondering, look, I'm a traditional, forget the technology, right? Banking is the most boring and most predictable thing. There are only two ways you can make money: interest income and fee income. Interest income is taking money low and lending high. Fee income is the other services for lending and everything like that, and some customer. So when I see the numbers, and I just think, especially from some market players, it's like, okay, what's your customer? How? Thank you very much.
All right, let me come to Dilly.
Can I quickly challenge this to the extent that we talk about trusts? Does trusts, do you give trust because I wear a suit? Because I speak the same kind of language that you speak, right? Because the truth is, if you look at the banking loan system, we are essentially giving 80% of loans to the 5% of the economy.
1%, actually.
Exactly, right? And these loans have then turned bad. We can look through all the provisions that's happened in the last 12 months. So I'm saying to myself is, if we think about the entire banking industry as one, wouldn't we rather say, let's take $1 trillion and go and do SME and go and do grassroots? Because already, at the end of the day, you're losing the money to...
Yeah, it's a very important question. And let me build on that, Uzoma.
Yes.
I remember, I don't know who had Diamond Bank accounts several years ago and they launched this credit card stuff. I don't know if anybody remember that.
Yeah.
Right? Yeah. So I mean, you were in the thick of this, and this was like, in the world of hip hop, you say before it's time.
So we had a guy that had an entire masterclass around that card, right? So it was like, you get your salary, you don't spend it. You take it, you put in fixed income. You use this card. You use it to do all your transactions. By the time the money comes from here, you use it to pay back the card. He had an entire masterclass.
Great.
It was crazy.
So to build on their point, so you've tried in your previous history to lend to these people who don't wear suits. There's regular guys, through credit cards and all that stuff, right? Pure retail banking. And there were issues. But we would say, well, maybe it came before its time. So now, things have changed. Technology is better. You have a better regulator. There's NIN, there's BVN, there's mobile phones. People, have better security in quote. What didn't exist then that exists now that can make what Otunba wants happen?
Okay, and that's a very good question. But it's still the same thing. I still don't have the data.
Data?
Yeah, of the people. So like listen, so look at it this way. You have a better car. You have a better driver. What you're telling me, you have a better car. You have a better driver, right? But the petrol is still the same petrol that you were using then. So the performance is still the same. So, and that's why we are clamoring for open banking. And that's what that's what they did in the UK. Because the reason why, so if you ask today, why do you think that Monzo or Revolut will be as big as they are now if they had not done open banking in the UK? Because the traditional banks were a cartel. Because these are the guys that had information of people and they were not letting it go until they were, so for them, so suddenly the UK says, you know what, we're taking the power of the data from the banks to the consumers. So now the consumers have a choice. So these other guys are now, so like now you can give your data to anybody. So when you look at it critically, what has changed? And a definition of trust. So, you know, like when one thing, like, you know what, let me use like Union Bank, for example, one of those old legacy banks. Trust for people is different. You see, like when we say, oh, Union Bank is going down in the city and everybody is like selling their shares and everything, the man in the village, if you tell him, oh, this is what's happening, they just look at you. As long as that branch that is there opens at 9 o'clock and closes at 5 o'clock, that is trust. Trust is just about expectation and reliability. Everything else that you say is that, well, I don't understand what these things are, but I know this place here, I go in the morning, it is open, it's closed. Now, the day that it doesn't open, when it's expected to open, then trust starts to be eroded. The problem is that trust is in the data, and that's what trust is in that information. And it is, nobody wants to take a risk. So you talk about the big corporates. Yes, but you see, one, I have to park my money. I'm taking all these deposits from individuals. I have to park my money somewhere. It's either going to be treasury bills or it's going to be in these classes of risk of assets. Which one am I going to choose? And also the SME market is also a wild market as well, right? So because we did a lot in Diamond Bank, we did, but the pricing, and it goes back to that problem now. We price the risk. Even the credit cards, we price the risk in there. But you're pricing a risk where you cannot lend to a SME to buy. You can lend to them for working capital 1-2 months, right? It's affordable at 20-25%. But when it is to expand the business, to acquire land, to acquire equipment, how much? What are the returns, right? And so, but meanwhile, you can. So like this is the lingo. So you go to a corporate, you go to him and you lend to him at 20%, and he tells you that you'll access his SME, so his supply chain, which is when you add all that up, that now makes, because now you can tell your distributors or your suppliers, you will get favorable pricing. So when we look at everything from an aggregate perspective, yes, that's why we're lending to a corporate. Today we can, but then if it defaults, somebody is going to pay for it. It's the taxpayers, and it is the government, right? Or it is actually the taxpayers, because that's why you have your forbearances and everything that people are paying for. But the small guy, who's going to pay for it? The cost of chasing 1 million naira is more expensive than the cost of chasing 1 billion naira.
I agree.
Well, I feel like, we are, again, we're talking about working capital for these people. From a payment perspective and credit perspective, we are funding consumption and not funding productivity.
I totally agree.
We're not growing the economy.
What's wrong with funding consumption, though? What is wrong with... what is wrong with...
There's nothing wrong with funding consumption.
Exactly. What's wrong with funding holiday? What's wrong with funding fashion? That's consumer credit. What's wrong with
that? Funding
doesn't that feed into the larger economy?
The challenge is if we're funding consumption based on local production, fantastic.
Okay.
If we're funding based on, but it doesn't really matter. But it doesn't really matter. But then again, so that helps, and that is what we're beginning to see. To be honest, actually, so we're beginning to see, but where the opportunities are is not where people are going to the creative industry. Now, why aren't people funding the creative industry? Where actually that's where Nigeria is making its name. That's where you're seeing emergence of Detty December is because of the structure. Money likes structure, because structure is trust. Nobody enters the canoe to cross the Atlantic. They enter ships. And that's a fact. So you have to put those things in place. And so it's actually, and we're beginning to see that, right? So like if you look at people like Dozie, where they've raised money, they sold their business, they put structure in the business. So it's how do we, the problem with Nigeria is, so like when I look at M-Pesa and we talk about Kenya and how they've been big in digital, no. They just scaled a very basic product across. In Nigeria, we have invested more in technologies, but we haven't scaled it across the country. And look, NIBS, our payment system is actually one of the best in the world. Forget Africa.
See, nobody can argue this point.
It is one of the, and the reason why mobile money failed in Nigeria, because we had a more efficient system. Mobile money solved a very inefficient system, and it was solved. Still NIBS. Nobody can say much. And in fact, the UK actually caught up with Nigerian banking system 4 years ago, something that we have been doing about over 10 years ago.
Yeah. All right, let's move on to AI use cases. Yes. We've talked about AI a lot. There's been a lot of AI spending globally. And I mean, you're in this space. Otunba is in this space as well. Tunji is as well. And I'm wondering, what are the AI use cases that you see at the moment for your kind of business?
Okay, so let me tell you what we are doing. What we're doing. So, in terms of lending, and so that's why we need open banking. Mayo, that's why we need open banking. That's why we need open banking.
Mayo said done.
Because AI feeds on data. So without the data, forget it. So what open banking is going to do is going to unlock the data for us to now say, we can, in fact, we have enough information to reduce the cost of lending. Because we don't even need collateral. We reduce the cost of lending to the places where because that productive sector, listen, for me, no matter what anybody says, SMEs, right, the biggest engine of growth. Forget the corporates, forget all this, like the biggest engine of growth, they will employ. In fact, my route to growth at Sparkle is to provide resources to small businesses. Because every small business employs people. That employ people, and so consumption will grow, deposits will grow. And so if you look at it from a national scale, if we can just unlock data so that we can make better, because look, if you're going to lend to 40 million businesses, your traditional ways of doing it is not going to work.
It's not going to work.
It's not going to work because the operational risk is so high. Human beings make more errors in a day than machines. It's as simple as that. Just doing operational stuff. Not to talk of now lending. So for me, that is where the great opportunity. That's where the great. So, like, first of all, on that lending side, AI is going. Now, even on risk, on risk, and so lending, so they're even tied. So, but the risk from enterprise risk, fraud management.
Yeah.
You know, so I'm actually, traditional banking is very boring, right? You come to this, like people ask me, so what's the difference between being a CEO of a traditional bank and being a CEO of
a challenger bank?
Of a challenger bank. When you're a CEO of a traditional bank, is that you're so high up there, like it's like you have shock absorber.
Yeah.
So when you're going on the road, you don't feel the bumps, right? So, but when you're a challenger CEO, you feel
everything
bump.
Comes to your table.
If you want, it's just like if you want something, you've got to go and find it. You've got to go and find it yourself. So from a risk perspective, the biggest business in Nigeria, a big business in Nigeria is fraud. A bigger business is fraud management.
Wow. The biggest business in Nigeria is fraud. The second biggest is fraud management.
No, a big business in Nigeria is fraud. Yeah. Bigger business is fraud management. Yeah. And it's all cybercrime related, right? So you have a lot of people who are out of jobs, but now in jobs of really sitting down and seeing how they can just, once a new bank starts, There's a community of people that actually do that. So like fraud management now is a big, now fraud management, just imagine you have profiles. So like once you have a profile of how a particular fraud behaves, then you have generative artificial intelligence that is learning. It will learn faster than you are. It will comb your system and just say, the probability of this guy being a fraudster or being related to this person. So automatically, you're not guilty to proven innocence. You just say, okay, this guy, okay, you just be on this level until you prove yourself. And then, so that, because we cannot, as human beings, monitor
everything.
And we're a big country, right?
Yeah.
And if we say that digital is the way forward, for the way forward, then you have to start looking at generative AI and looking at how you're going to come to data. If you look at, why I like Dubai? It's a police state, digital police state, not a police state. It's a digital police state. And that's why they can let you do anything that you like because they will catch you, right? Because from the minute you enter the country, right, and especially your citizen, there's nothing that you cannot do. You do that is not actually mapped. Whether you go to your hotel, whether you go to a restaurant, where you go, everything. But it is covert. It is not in your face like some other countries that you go to and you feel that the police is there. It is you don't see anything like that.
Can I challenge this thought process?
Sure, please.
Do we have AI in Nigeria or do we have automation?
Very good question.
Very good. So you don't use AI in your business at the moment?
I don't even think we're doing AI in Nigeria. I think what's
so I agree with that. I don't think we have AI in Nigeria. So I think the AI conversation is not.
No.
Is AI not ChatGPT?
No, but we have AI now. When you say that, first of all, we use AI. You see, like AI is not like one big, like it's very the simple thing. When you came here, how did you go? You do which route should I take, or did you look at Google Maps? That's AI. Look, that's AI.
So in a workplace, how are we using it then? Because maybe sometimes we don't know that we're using AI at work.
So this is my philosophy of artificial intelligence, right? It's just a now bigger, sharper calculator, right? So, and like if you look at everything, like if you look at businesses, right? Businesses is like, I get data, any business, whether it's government, whether it's banking, I get data, I turn it into information, I take a decision. The decision I make determines whether I'm going to be successful or not.
Yeah.
Right? What AI is doing is taking data from many subsets, right? Giving you information and saying, okay, here, but it's now even saying, you know what? The probability of you taking this decision is actually now actually helping you. In our business, in my business, so like when you look at automation, just tells you the different automation says, take this and put this here. So we have robotics, right? So we give. So like we have what do you call it again? So like in Sparkle, for example, so we know that if certain things happen, customers will say this, and then the agent will do X, Y, Z, right? So what we just actually got in robots to like, if at 2:00 in the morning you do a transaction and like the transaction fails and you report that, the agent knows, oh, this is a transaction, and a robot will actually reverse that transaction without actually human intervention. Now the other one is if you use anybody who has Sparkle today now, just go to Indy and ask Indy, so what should I do in December, for Detty December? Or a better question to ask Indy is, I have a business name. With the new tax laws, what are the benefits or the opportunities if I move from a business name to a corporate name? It will give you an answers and also options as well. Now that's not automation. Automation is your classic old chatbots, right? So I think for me, the biggest opportunity for AI is advisory to businesses.
Yes.
Advisory to businesses. But then again, you need people who actually understand
the advice.
All right, guys, let's move to the last topic, which is the future of jobs. And I want to start with Tunji and I move to Otunba. So we talked about jobs earlier, and 2024 like a lot of people agree, 2022, 23, 24 was the year of Japa, right? We all saw a lot of talent move. 2025, there's a slowdown to Japa because of immigration issues globally and all of that. And then we also start to see work from home sort of start to like dwindle a little bit. You're seeing, we're seeing startups saying, you know what, no more work from home and all that. So where is jobs going to now? Maybe let me start with you, Tunji. Are you, is it automation, as they say? Is it AI? Is AI going to replace jobs? Or are we still in a market where the employees have the power over the employers? You saw Sam say that if you ready to take your staff.
Absolutely. What the world isn't seeing is that more than ever, especially with the rise of AI, organizations are actually looking for star players. More than ever. There are all kinds of stories of full suites that are run by AI. But it is now that we can do that people are actually looking for the star players, especially because it's never been easier to create a 5-star CV than it is now. You can just put your name, your history in.
This CV, the ability to do the work.
No, that's what I'm saying. Prior to now, if you came for an interview and you showed me your CV and I looked at the CV and I'm like, wow. And you know that even the interview session, I can have a monitor at the bottom that is responding to what you are asking me and giving me real-time responses. So I can hire you based on that interaction, right? And have the worst staff ever, who basically might not even know anything about my business, but he has given me all the right answers, right? So now more than ever, businesses are actually looking for those star players because it almost feels like they are difficult to find. So the future of work will be a lot of automation, will be a lot of AI involved. But more than ever, if you are actually somebody that stands out in your field, this is where you excel. Like Sam is looking for the guys. In fact, he's not even hiding it. He's going to steal from you. So all right. Of you that
Arnold, so do you still, when you're hiring, do you still look out for qualifications, or do you look out for, man, can you just do the damn job?
Yeah, so I've never looked out for qualifications. I'm one of those. Anyone that knows me, I'm one of those anti-CFA people as well. So I think CFA. Anyway, okay, that's another conversation. So especially when I look at myself, right? Qualifications. I always feel like in your CV, everyone has qualifications. Everyone's a hard worker. Everyone will say they can deliver.
Work under pressure.
Yeah. So if I personalize it and look at the way I got into the industry, it wasn't necessarily because of my qualifications, but because I already had a stock portfolio when I was 19 years old. Right. So when I was 19 years old, 20 years old, I read books on investments, and when I went for a job interview, they were not looking at my qualifications, but when I showed them my trading statements, it trumped everything. And for me, that's what I look for. I look for someone who has passion for the market, already is in the market, already taking risk in the market. Qualifications, I've never looked at qualifications. And I think going forward, artificial intelligence, like I said, artificial intelligence can beautify CVs. I think more and more people will look less at qualifications and the ability to do the job. And you should have been able to do the job without an employer, because artificial intelligence allows you to do the job without an employer, right? So whether that means you're a superstar or not, I've always looked for superstars. I've never looked at qualifications. Qualification has nothing to do with my hiring desire. It's always, have you been doing this before you started the job?
Uzoma, so you have a first-class graduate and then somebody who can actually do the job. Who are you hiring?
Well,
first class in what? Okay. First, let's start.
No, whatever.
Well, I mean, like, for me, I don't even look at anybody's CV. So like, I speak to everybody that comes. I'm the last person. Like I'm the last, so like I speak to everybody. So like when they come, I assume that they're sitting down because they're competent. They're sitting down because they kind of passed the culture test of Sparkle. But for me, in the end, it's always down to, I'm going to ask you questions about, background is very important, right? Your background is your background.
Your
right?
background?
Your background, yeah, definitely.
So when you say background, what do you mean specific?
Huh?
What do you mean by background?
When I say background, because your background is also like, your background is like how you grew up, what you did, what you learned. So I'm going to ask you those things because what values you picked up and see if those values are aligned with the values of, culture. It's a strategy for Brexit of any day. So you got to find the linkage to that. The second bit is how curious are you? I mean, what I find today is that people are not curious, right? They're not like, you want people who want to conquer the world. People just want, so like, it is, for me, it is like, because we're a startup, right? Yeah. We're going where nobody has gone before, right? So are you, and I always tell my people, are you a car driver or are you an astronaut? I'm looking, so you will say you're looking for stars. I'm looking for astronauts. People who want to go to the unknown and are ready not to be, like, I know some people are going to hate me, but the most entitled people in Nigeria are bankers.
Bankers?
Bankers are the most entitled people in the world.
There are no bankers here.
Because
there are no bankers in the room.
Okay.
Except old
because
bankers.
I've been there before. Because I've been there. I'm still there because we're most entitled because that the entrepreneur, the spirit is no longer there. What I hear is like, I've worked so hard. I've worked for 20, 30, 50 years. I've done this. My question is always, what have you achieved?
Wow.
We are now in an intelligent era.
Yeah.
And so everything about AI, it just lifts the standard. So your interview questions have to be more sharper, right? It's no longer, you cannot use those traditional ways when somebody is using new methods to counter it. So it is about upping the bar. It's an intelligent era. So it's no longer, I worked for 8 hours. No, it's what have you achieved in 8 hours? And if you have each achieved this in 8 hours, if somebody has achieved that, what you've achieved in 8 hours in 2 hours, that's the guy that I want. Because that is exactly what, so for me, whether it's AI or not, we know that we're in an intelligent area, there are all these technologies.
Just get the
how
job
are
done.
you using it? And so like when I ask people, so like tell me, so if you came here today, how can you make your job? So like, for simple question, if you came to this office today, right, and this is your job, how can you shorten the process from here to here? I won't ask you about AI or anything like that, right? If you don't know how you can use it or even bullshit me about that, then you shouldn't be here. You shouldn't be working with me.
So let me ask. Sorry, background for me is a tough one, right? Because I was a black boy growing up in London.
Yes.
Trying to get into finance. I didn't go to Oxford. I didn't go to Cambridge.
No background.
In that sense, my background played against me, and I couldn't get a job in the big hedge funds.
Yes.
The hedge fund that gave me a chance was someone that didn't look at my background.
What is your
right? So
look? If your parents are farmers, that's even better than my. If your parents are farmers, we know they are. You know what? For me, it's like we live in a place where, look, when I was growing up, right? Today, look, when I was growing up, there's no way if I even did one dodgy transaction and I used it and bought my mother I wouldn't even buy my mother a present because first case you ask me the background, where do you get this money from? Right?
So the background you're alluding to is values.
It's values background.
So it's not
values.
class.
So yeah, exactly. So
Okay.
like so like even like if your parents look, so like how old are your parents? 80. So what were they? Civil servants. Then I go back, I think of what civil servants were at that time, right?
So you know
I
that
know
person
it's
has
value
values and all
exactly. Right? So like people tell me, for example, okay, what do your parents do? They're in business. What type of business? You can't tell me what your parents do in business. It's a red flag.
He's a businessman. He's a businessman.
It's a red flag. Because why would your parents tell you what they do?
My father is a businessman.
I don't think it's a straight answer question. I think it all depends on the individual. I've had the opportunity of schooling in Nigeria, in the UK, in America, and I can honestly say that there's nothing like American education.
There's nothing like what?
There's nothing like American education.
Okay.
They almost kind
Nothing
of
like American
nothing
education.
like it.
It's
They
better-
pump
it's
they
very
pump
low
you
on
with
juice.
some kind of juice that you wake up and feel like I can conquer the world.
Okay, yes.
There's an orientation that the environment comes with that just feels like I can go out there and I can bullshit anybody. right?
Yeah.
So that it speaks to maybe background. It's very important. On my own personal basis, my first job, the first time they asked me for my qualifications was my 7th year. That was the first time that I submitted my
Your degree.
my
and all that
my
stuff.
degree, my transcripts. But I learned very quickly that grit, hunger, curiosity, and just personality.
Yeah.
So I would, if I saw a first class student today that had no personality, I wouldn't hire him. Personality to be able to, for me now, for instance, all my appraisals, my boss is probably going to see this, but my old job, my appraisals, I used to do it in the club with my boss. That's when we agree what my rating would be, what my bonus is going to be, because that was the kind of employee I was. We'll push it through during the day and we'll party at night. But I understood very quickly that everything, at least for my life, has been based on relationship and how I build it, whether it's whether it's internal stakeholders or external stakeholders. But I always look for that fire, that extra fire outside of just working in the office when I'm trying to hire someone.
All right, Mecca. Let's see if we have questions. Any questions for Uzoma and Dele before we switch? Yeah, all right. There's somebody else as well in the middle there. All right, go ahead, sir. Name and where you work.
Hi, my name is Brent. I just started being an entrepreneur like a few months ago. So
nice.
my company's
Welcome
not there
to the
yet.
club.
But yes, thank you guys so much. This has been very insightful.
Welcome to the hard life.
We are here for you.
But and my journey to entrepreneurship was not one of a great, like something happened, something inspired me. It was this topic people are talking about now, the job search, right? And I have something I wanted to say, like I heard, but I was like, as somebody who is it just came out of the job market, that point of everybody can be a star through your AI, your resume, I think that is wrong. The problem with, I felt during the job search was, and this job search was in America, everybody's a superstar now with AI. So everybody can go to ChatGPT and say, ChatGPT, these are the keywords I want you to include into my resume. Please apply to me. So now these companies have 10,000 superstars applying. How do you now filter it, right? And you guys also alluded to it, like it speaks about like your personality too has to show. But the problem is when there are 10,000 superstars, how like I don't have the opportunity to show the personality you're talking about. So yes, exactly.
So what's your question?
Oh yeah, so my question was, okay, now going back to like, for people who are going through that, right? People who are, let's say, in the States that are looking for jobs or in Nigeria looking for jobs, beyond personality, right? Like, how can they actually show themselves to these companies? Because, it's really tough out there for a lot of people.
All right, good. I'll let Tunji answer that question, but let's go to the next person as well.
Why is it Tunji?
Yeah, because you've been looking for, I remember when you were looking for jobs, so you know how to do it. You're the right person.
Yeah, hi there. My name is Alex, and my question is more about like the future of jobs. Now, when you think of how it is now, the market is not just Nigerian, it's also now gone global. So let's just say if you're a UX developer and a company is paying you 300K, you can find a remote job that's going to pay you maybe 10 times that. So how will Nigerian companies be able to compete with the global market when somebody knows that I can do the same job and get maybe 5-10 times more than what a Nigerian company? Basically, yeah.
Good question. Uzoma will answer that one.
Why
Next
Uzoma?
Uzoma will answer that one. Yeah, last person. Yeah.
Hi. Must the question be on jobs?
Name, sorry.
Hi, my name is Onyeka.
It could be anything.
Okay, great. Hi, everyone. So my question is around all the conversation around access to finance and funding enterprises and consumer financing. So what do you think development finance, like what role do you think development finance can play apart from like the usual grants and all of that has been happening, just given the way the landscape has changed? Like how can we leverage development finance in a way that doesn't look like philanthropy, because conversations now is around, okay, we are all funding this entire thing, but what's the sustainability? The market is still shit. The banks are still not trying to lend to the underserved. What can development partners do differently to sort of like shift stuff?
All right, good question.
Finance?
Good question. I mean, if you had said philanthropy, I would have said Tunji and Arnold would have answered that, because those are the very rich guys on the table, but I'll leave them out. Otunba will answer, and Mayo is still here. I think I'll let Mario take that question, and even Sam as well. So Sam is gisting. Sam is making money by the side, by the way. You can see he hasn't left Mario at all. I've been watching him. We have to break that. Whatever it is they are discussing there, 10%.
Please bring it to the class.
The drinks are mine, because there are deals going on there. But Mario is going to respond to that question. Don't worry, she'll repeat it. Don't worry. Development finance. I know Maya is sharp. Maya was paying attention.
I know the answer. I
You know the answer as well. All right. I think those are. Is there a third person?
No, that was the third person.
Oh, that's the third person. All right. So, quickly response.
Tunji job.
Okay,
The
so,
first
so
one,
I
Tunji.
think that the general context is jobs. Getting jobs are not a linear thing, right? So I've always believed it to be a stoop to conquer kind of situation. You might not have the ideal kind of job right now, but bills need to be paid, so you want to go in and do the job that is available to you and you are not underemployed. So it's not necessarily that you have a PhD and you're going to McDonald's because you need to pay the bills, but you are in a job that might not be at the exact par you want, but it's not also undervaluing your capabilities. But those jobs also give you the ability to be able to show yourself, because at the end of the day, people like Sam will want to poach people who are doing well in those organizations. We have one conversation right now about a fintech suing another fintech. I don't know if it's true, but about stealing their staff, because of course, whoever those staff were star players. In my small organization, as tiny as we were at some point, a company that had gotten, super funding just stood at the door and was poaching on my staff, and I couldn't fight it. I shook them and said, I lead you with God, God bless you, because because if they are paying you that much salary, thank you, go with it. So at that point, there's nothing that business can do, and they will come and take those stuff. So I think the core for anyone, just like a business person, is the long-term growth of his business. Not really concerned about what happens today. It should also be the same thing for the employee. I have a career trajectory. I want to get to a certain point, but this is where I am now. I need to be the A player in this place, so that people like Sam will see you and poach you.
Can I also
add
to that quickly as well? I think as a job seeker once, right? I think that, and I try to speak to other job seekers when I can, because I get asked this question. I think that you should try as much as possible, and it is possible to stand out as possible, right? And I use myself as an example. How I got into the industry, I was in the industry before I was in the industry, which is what I was talking about. I had my own portfolio. I was writing blogs about my investment decisions without even having a job. I also wrote for the CFA UK Society on Africa, and I was the first person to write for the CFA UK Society on African markets. I didn't even have a CFA. I didn't sign up to have a CFA. I knew that the world is competitive, and I really, 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 really wanted to stand out. And I think that with internet, with social media, with AI, it's actually giving anyone an opportunity. I know it's difficult, and I'm not saying it's easy. It's extremely difficult, but it's giving everyone an opportunity to be able to be as aggressive as possible. And it also makes it harder, but it also allows you to be aggressive. And I think that as a job seeker, one just needs to go as all out as possible, almost dying for it, almost allowing it to consume you. And that's, I think, something that some people don't understand. I think when you allow your career goals to consume you, and it's all you think about, it's all you know, I think that it will make you stand up, because you start thinking about things that no one else is doing, and things that put you on that level. And I think that, I think that's
all right,
that's
great. So just from my own perspective, let me be a bit more pragmatic.
I wasn't pragmatic enough.
A bit more. I said a bit more. So if you're applying for a job in maybe a bank or an oil and gas company, and they're like, you know that there's going to be like 10,000 applicants. Personally, if you have, let's say, for example, a 2-2, don't even bother, man. Except God is behind you. Because the chances just becomes very slim. Yeah, because typically when they are receiving CVs, nobody really cares about your background or stuff. They just start to see for first class, 2-1 or whatever, right? So if you're in the bracket of below first class, just if you can drop your CV, just know that it's God. If God just back you, it's okay. That's one. If you don't have that, let's say you're not at first class, the next thing is if you're applying for that kind of job, know somebody because you're in Nigeria. If you don't know somebody, don't bother. Just sit down in your house. It's okay. Eh? Now, so the third is if you don't have a first class, you don't know someone, I think it's also good to be a small fish in a big pond, a big fish in a small pond. I tell people that a lot. Everybody doesn't have the same path. You could be a big guy in a small company and you really make your mark, and that just sets you up for the future. Some people end up working in Diamond Bank or in GTB or whatever, and then that's just their luck. And then some people start with some small organization, and then some SME, and then find their way up. So everyone's pathway is different. So that's my own practical response to that. If you have first class, you can apply for all those NNPC jobs and all that they throw around. If you know people, apply. But if you don't, it's left to God to help you.
I add that you can cold call.
You can what?
Cold call. I think it's one of the
cold emails.
Yeah. Like so, basically, if I wanted to find Arnold, I feel like the world is so small that it's 5 to 7 degrees of separation. I could at least find Arnold's email, and I could send him a catchy email.
Yeah,
that would make him read.
Yeah,
at least look at my CV.
Yeah,
but
that's like 1 in a million, though.
Yeah,
no, 1 in a million chances, but it does work.
Never speak from my experience.
I know it does work. It does work, and that's been pragmatic as well. Thank you. All right, the next question was from him, and that was Uzoma's question. The question around
earning dollars, we working remotely, and not coming.
Yeah, that one's a tough one, man.
Okay, so like my view is, and like I think that the view of the world is going to be that context matters. So you can be a fantastic engineer working remotely, millions of miles away from Nigeria, but you don't understand the journey of the customer, the journey, the minds of the people, because we're a different type of people. So like, we're not just black, we're not just Africans, we're just West African, and we're in Nigeria. Even in West Africa, you have Francophone that is different from Nigeria. And so to make a better product, or to be a better engineer, or to be valued, right, you're going to have to understand the context and the people. And for that, you have to be in this market. And where the biggest opportunities are in the long term is in this market and not in those established, mature markets.
Yeah, but his question is that you're an employer, you've got an employee who's got a job that you're paying $15 an hour, $25 an hour, and then he's working for you and he's earning $1 an hour. Yeah. How do you keep that guy?
No.
Like, is that your question?
Yeah.
So, in this world now, how do you keep that guy?
And the beauty, happiness of, so let me just tell you a story. So when we started Sparkle in 2019, we're building the app. It took us a year. And so then I was thinking, oh my God, COVID was a disaster, but it was actually a blessing in hindsight, because the COVID lockdown, I had 14 engineers that were there, and we were working together, huddled remotely, and we built the app. As soon as the lockdown was down, I lost 80% out jackpot immediately.
All jackpot,
right? And so they all jackpot. So, but now, with, should I say, the global trends now, where everyone is looking at their own nations, and all those opportunities for Nigerians to go abroad and everything, and of course the state of the American market, it now becomes a buyer's market. So like where before people were saying, no, I'm only going to work remotely, I'm going to do this, I'm going to do that. And like where you're seeing the great big companies like Amazon saying everybody's coming to the office. Like we're tired of all this because of productivity. So we're beginning to see a change. Not that it's going to be permanent, but do I agree? So I'm not a fan of coming to the office every day, but neither am I a fan of remote working, but there's certain skills that are always going to be remote. There's certain skills most skills are going to be hybrid because teamwork is teamwork, culture is culture, and it will always be like that. There are some people, but the good thing about it is that we have many people. For me, is that technology is going to allow us, because not everybody. So if you look at Nigeria, how many people have passports? Look, in my office where it is supposed to be a Cosmo office, if I ask people, okay, where's your passport? Where have you been? Not many people have left the country, right? So
yeah, but can they be working for somebody remotely and all that? Doesn't that or do you accept? Would you allow an employee have two jobs?
No.
Your job and honor.
In fact, we encourage entrepreneurship. So if you're going to understand your customers, have another job as long as there's no interference and there's no conflict, right? And as long as you got, for me, so it's not about how hard you work. And I always go back to that. It's not about giving me 8 hours. It's about saying, like, at the end of this month, because we're now working different. This is what are you going to
just deliver?
Anything you want to do outside that, because people have been doing it since the ages, so it's not today, right? And so that's my view. So if you can deliver without actually jeopardizing or putting my organization at risk, so be it.
So I think that I think that essentially Nigerian employers have to just start paying more to be competitive. Yeah. That's what I think.
Yeah, round of applause to that, please. Round of applause.
I think that Nigerian employers have to start paying more. I think.
Yeah, wages are pretty low.
Which money? Let's somebody.
Which exactly?
No, because we've talked about it. We've talked about it before.
Wait.
Employers need to pay more. We've talked about it.
I agree. Employers need to pay more.
Yeah, I think
but also employees and people need to look. It's not about look. For me, it's about delivery. Yeah. Right? If you can deliver, if I employ you for 8 hours and you deliver in 3 hours, take the 5 hours and do whatever you like. But in the end, what happens is that I've tried.
Yeah, but this is an employee that's on a global level enough to get attention from outside, so he can deliver.
And then, but he will go regardless. He will go.
So this is the thing, right?
He will
And
go.
I was saying this
no matter what.
I said it earlier. I have never been the person to stop you from leaving.
No. But
no. Let me say this, right? It's not as if it's not a pessimistic. It's not a pessimistic attitude.
Talent. With that attitude,
but are you saying that
it's not that I'm
attitude? So if you have a staff that is good,
you let him go.
Hold on. You have a staff that is good, loyal, great.
You're going to continue to have
subpar
employees.
Wait now, guys. Hold on. You have a staff that is good, great. Staff comes to you and says, "I've done well.
Yes.
These are the KPIs you gave me.
And by the way, someone in Saudi Arabia has offered me
and I'm all right.
Yes.
I've got another offer.
Yeah.
Kind enough to tell you I've got another offer.
You say go.
Can you match it or at least almost match it? Would you say go?
Yeah,
you say go.
I don't used to like all these things.
Yes. I agree with you here.
Let's allow him now. Let's allow him land.
In my organization, we're not that old, right? Someone came to me. She's the VP of my organization.
What's the BPU?
VP,
okay.
She comes to me and says, Meta gave me a role. No, let's start this conversation now. We're saying we should increase salary. No. Yes, exactly. So where do I start to
Arnold,
give her equity.
Arnold,
give her equity.
Where do I start this conversation from? So you see this thing is immediately the conversation started and she just mentioned Meta.
You don't
I just sat back. So the thing is, my prayer was, you will not lose this job,
Exactly.
because I also, apart from the fact that this person works for me, I also believe that I have genuine interest in the growth of this person. Because this person's career trajectory, if Meta is in her CV, there's no way that this person's trajectory, and I can't in any good nature inhibit that conversation. So what did I do? I said, Auntie, the Lord be with you as you go forth. Now, the case now got to the place where
somehow, the person started to look at culture we had versus the remote culture in that organization, where here the person was super important and here she was just another piece
just a small fish
in a
big
global
pond.
equation. Somehow,
So she didn't take the job?
she has retained. No, she was handling both, and I knew about the other one.
Yeah,
you know when you are the side chick and you're happy with it. No, let's be real. Let's be real. Now, did I want to be? Would I be angry and fire this person? No, this person
was value.
It was value to my organization. Now, this is the case of I was comfortable being the side chick in this equation because I knew that even though I was now second tier in her thought pattern, that second tier attention was still very useful to my organization. So I was open to taking that because I couldn't pay meta money.
Otunba, do you have a view on this before we move on to the last question?
But what I want to
you have
say,
a clap
like,
back? Okay.
I just want to add. So we're in a very dynamic world now where the standard rules of recruitment, how you're going to retain people, do not apply anymore because there's just many variables. So even and to your point, I've always in my mind said, okay, these are my A, B, and C people in your organization. That's how you do. Your A people, you go far and beyond. Even you take money out of your pocket and you make sure that because you know that the cost, even because it's for your own peace of mind. So you're not even for the organization, it's your own peace of mind. And you have your B people and your C people. So when your A guy comes and tells you, and you know that you have helped him and tells you that my wife said because Nigeria is also a problem, but you try to create a haven, right? But they still have the security issues and all that, and they say they are going to go. There's nothing that you can do, and you have done your best. So that's an A person and that's all you can do, and you have to go and start looking for an A person. But it is not. So it's not a question of pay more. It's a question of you cannot. Right? You have to cut your coat according to your cloth and not to your size.
All right, it was the last question from on development finance.
Yes, exactly.
Let's have Mario respond to that.
Yeah, so a few drinks already, so yeah.
It's drinks and mics. We don't have it.
Look, I think there's a undoubtedly critical role debt finance plays in all this conversation, right? And that's for sure. But I think the real conversation we need to have, and this is as a macro, is what does that mean, right? And because truth be told, whatever we've been doing in the past just hasn't really worked. And how do you define what development finance is, and how do you implement or execute on that mandate? And I think that's the real conversation that is increasingly being had today. So yes, development finance is where you unlock a lot of the impact type, long-term things that doesn't make commercial sense, but needs to be done for developmental reasons and all of that. And this happens everywhere in the world, by the way, which is why development finance institutions exist. But how do you execute it in the way that you get the outcomes that you desire? So more often than not, in my own short experience these things are often viewed as freebies, right? So you say, let's go and find development finance money because it's
like Bank of Industry.
Either is very cheap.
Bank of Industry like that.
Either is very cheap, or nobody will come after me to make sure I deliver or perform or anything comes back, right? So, and we need to be sure that there's genuine vested interest in that, in the viability of that project in the first place, such that whatever developmental initiative you put around it, be it capital, be it training, capacity development, whatever sphere you want to look at, the thing then gets to the point where it can deliver an output that makes sense. Because if you don't do that, you just keep looping. It just keeps going round and round and round the same loop. And I think in an economy like Nigeria, you look around everywhere, across every sector, there is need for some development type related projects, right? You need either in technology, education, healthcare, housing, everywhere. And you look at, I'll take a classic example of MRIF, right? It's something that has just been launched and is going on in the housing space. I mean, the way that has been delivered to get housing mortgages out at sub 10%, I don't know where that pricing landed eventually, it was quite interesting because they merged all sorts of things into that pool to make sure the costing of that combination of market, grant, equity, get it delivered so that people can get access to affordable housing. And then you reinforce that message so that you solve a housing problem on a long-term sustainable basis, as opposed to, it's 10 billion. Go and build it, go and do something, and then what? Either it never gets done, or it gets done, nobody uses it, or you get what I'm saying? So, and I think that all come. And by the way, this is happening. When I spoke about the D-gas earlier, these are the kind of things they contemplate. Okay, how do you do this thing in such a way that one, when there's no physical space, who picks up that tab? Because somebody has got to pay for it.
Yeah.
There's no freebie.
Yeah.
They can tell you it's free, whatever. Either it's been budgeted for, someone is printing money, or someone is not repaying something. There is a cost to this thing, and that cost must be properly accounted for somewhere, so that we then know that this is the reason why we're doing this thing, and this is the outcome we're looking for. It does not always need to make commercial sense. True. It could be a social initiative, something that empowers or unlocks something in the second or third degree. But it needs to be done. And I think that's how this is done everywhere in the world. And I think Nigeria is more and more leaning towards that now. So yes, development finance, thumbs up. It's the how and the execution around it that really is.
All right. Thank you very much for that, Mayo. And shout out to Ayo Olowokori. Because I don't know whether he's still in the house, but for those who haven't seen my TCT with him, that's my Coffee Table podcast with him. We did discuss a lot about Emirif, and he did break a lot of stuff down. We're going to chime in quickly before we move on.
Yeah, I was going to say, development finance is actually great, but it has to be tied with impact. Also, should I say, performance-based, even look, there's no economic prosperity without social development. So there is a lot of potential. But so if you're going to borrow, if you're going to get money to do something, what's the impact, and how does that help in that journey? And I think that's what's actually missing, because we see and it has come also from those development agencies, especially Nigerian ones. Yeah. What are you trying to do? What are the outcomes? I want to go back to outcomes, and so bring that out, and so you find people who have that capacity, whether they're internal or external, I don't care, to actually do that for us.
All right, fantastic. We come to the end of this particular section of this podcast. But before you go, Uzoma, it would be unjust if I don't ask you this question. Flashback 2018-19, a lot of people here don't know what it feels like, giving up something that you really love and the courage that it takes to do that. So I know it's been a long time, but you were the CEO of Diamond Bank, you gave up a merger. Quickly, what was for want of a word, where did the balls come from? Why did you say, you know what, let's just merge and move on?
So I think you're the first person to ask me that question. So you look at it from where are we going to be in the next 5 years, right? And even if we were the best at what we were, we will still be relevant. Now, if you look at the market then at that time, right, you had tier 1 and tier 2. So we were tier 2, but we were a great retail bank, fantastic retail bank. But in 3 or 5 years' time, is the market ready to say, and especially don't forget, you have all your stakeholders, regulators and everything, is the market going to say, with any consolidation, will it be still a relevant player? Because in the end, the market was moving towards the bigger you are, the better every resources were allocating to you, and we didn't see that. So if we could complement an organization that was very good at corporate and crap as retail, right, then you get a lot of value. And then it means that the synergy is actually better, because that means there will be less job losses. You complement on different sides. From a shareholder perspective, big bang. From my perspective, it's like, listen, you're always going to be fighting. You're going to be always looking for, but in the end, capital goes to where people think that the future is, right? And the future, and you can see even now, the future is in
digital.
Digital, but also in big capitalized
in size, scale.
In size, bigger than in size. And just don't forget, a year after that, you had COVID. Now look at the market. Look at the market size of tier 2 banks
compared to tier 1.
Compared to tier 1 after COVID. We made the right decision.
All right, fantastic. A round of applause for Uzoma Dozie for being on Drinks and Mic today. I'm sure we got a lot of value. Thank you so much to him. And then we're going to move to the last section. Thank you so much, Uzoma. We're going to move to the last section. Sam, we need you here.
Sam, stop that conversation.
Yes, please. Thank you so much to Uzoma and Mario as our guest. The last conversation, time is fast spent, so we're going to move quickly on this last conversation, and we're going into a lot more relatable topic. So I want to start. I'm tired of hearing from Arnold and Tunji. So I want to hear. Aren't you guys tired of hearing from Arnold? I'm tired of hearing from both of you. I want to hear from Otunba and Sam. Then we'll come back to Arnold and Tunji. We're talking New Year resolutions, right? I mean, this is the period where people start. I know this is Detty December. Right now, people are just enjoying. They don't want to just spend all their money. But let's talk New Year resolutions. Dilly, when you're crafting New Year resolutions, what do you look out for? What guides your New Year resolution?
I don't believe in these things.
When you be feeding lions in milk, how will you believe in it? How?
No, so I believe in continuous improvement.
So you don't have your New Year resolution is not to feed more lions or to feed snake. Very soon now you start feeding snake.
I don't mind. But I'm just saying for me I find that when you set I'd rather I set a five year vision, and then see how I perform. I find that yearly I have to do it's too much pressure for me. At least it's personal, right? So I'd rather set a 5-year vision, and at the end of 5 years, be able to say, okay, I did well here, I failed here.
Yeah.
It allows for a level of extended review, right? Because I find that when I say, oh, I want to stop doing this in January, by February I'm back to doing that thing. So I'd rather a more,
long-term
view.
I do agree with Dele. I don't do New Year resolutions.
You don't?
No, I do not. Largely because I find that this concept of a new year is just a continuation of the old year, that we just arbitrarily picked a new date, so that is the new year. So there are two things. I don't have New Year resolution. I don't have big grand visions, right? I'm more a compounder of little efforts through time, right? And then I look back and see what I've achieved, right? So I set little achievable targets. And then those little achievable targets then compound into something more meaningful, right? So I have a continuous improvement mindset, and my biggest competition is myself. I need to be a better version of myself as time passes. I don't look at anybody that is bigger than me. I don't count other people's money. I
count your money.
You count. I don't count other people's money. I'm a very hard critic on me, right? I'm very hard on myself, extremely hard. And I don't think so I just want to be a better version of me. And what does that actually mean in real life? I want to spend more time with friends and family that matter. I think that's the most important thing in life. Everything that we do is in meaningful relationships. In the early parts of my life, I spent far less time prioritizing friends and family relationships. At this stage of my life, I want to do more. I want to do more of that. I want to build, in my mind, the best investment management in the continent, right? That's a long-term vision, but I do it with little short-term tracks. So yes, I don't have a specific, this is a new year and this is the new year resolution that I have to do. I do take stock of what have happened over the year, but I don't set a new year resolution.
All right, Arnold?
So I guess I'm the same as everyone, but no, I don't do resolutions. I've never been good at it. I always tend to let myself down.
You don't do it because you break them or because...
Yeah, I let myself down. So like Dele, so I work on a 5-year basis as well. So I try to envision where I want to be in 5 years, and then I really try my best to look at
anything that I'm doing today that will stop me from achieving that. And I really try my best to cut it, to stop it or cut it out. But I find that consistency or consistently doing something to achieve the 5-year goal or the annual goal really helps. Like helps in a way that I can't explain, and consuming myself with the idea of where I want to be in 5 years, and then trying to break it down in little consistent things that I can do every day helps in a lot of ways. But at the same time, when I fail in the consistency, which I often do, I really try to not. I try not to beat myself up, and I give myself grace. And I'm lucky and blessed to have friends and family and mentors around me that have opened themselves up to me to be able to. I check in with a mentor weekly. My friends and family have an idea of what I'm trying to be, who I'm trying to be, and they're not afraid to tell me that I'm dropping off. And I find that being able to take that criticism, something that it took me years to be able to do, but when I open myself up to criticism, and being able to take that, allowing people around me to tell me that what I am doing is detrimental to who I want to be, is one of the most beautiful things that has ever happened to me. Being able to sit down with someone to say, Arnold, you're slacking off. Arnold, this is not who you are. This is not where you're trying to go. It's one of the most and being open to it is one of the most amazing things that has ever happened to me in my life.
All right, Tunji.
I don't even celebrate birthdays.
I was going to say that.
I don't.
I'm not big on that.
I mean,
You don't celebrate birthday.
personally, I don't. I mean, I'm heavy on celebrating my kid's birthday, but I don't celebrate mine. I have a view in life, which is the same view I have with workouts, is the only bad workouts is the one you did not do. If you go into the gym and you lift one dumbbell, you have done a fantastic workout. Just come back tomorrow. So that's the way I view life. There's no New Year bow. It's Tuesday.
All right, round of applause.
It's quite interesting. Your view.
So my own view is that rather than set New Year goals, what I tend to do is set annual goals. Right, I do believe in annual goals because I always think 5-year goals.
It's too far.
Yeah, just too far, because I think that different dynamics that happens in life that tend to change things for you. So I tend to set annual goals. So I say, okay, I come into this year, and these are the things that I want to achieve, and I tend to distill them. So there are business goals, there are social goals, personal goals, family, and all that kind of stuff. So I try to do that. And then at the end of the year, I take stock and I say, okay, what did I do right? What did I do wrong? And that's basically what I do. So, I mean, you might want to call that New Year resolutions. The New Year resolutions typically will be like, I'm not going to smoke anymore. I'm not going to do this anymore. Yeah, I don't tend to do that. Yeah. So, but mine is basically, I just have goals that I want to achieve. And then I have strategies of how I want to achieve those goals, and I tend to execute. But let's move into investment goals, which is, within our ante here. And I'll start from you, Samson. So, if you're setting, because we have audience who, pay attention to some of the things that we say. So if you're setting investment goals for the year, or you're going to set investment goals for 2026, what are you looking at? What are those pillars? What are those, what are the benchmarks for the kind of goals that you set investment-wise?
That's because it's always very specific to your individual situation, right? So I'll just speak in more generalized terms, and then maybe you can tailor that a bit to your individual needs. I think it's very important that you develop an investment culture. And I mean, with products and technology platforms available, there is no investment that is too small. And I really think if you want to, regardless of your income position, you can always put something aside. Obviously, I'm a big believer in the outlook for the equity markets because of where we are from a combination of stable exchange rates / appreciating and declining interest rates and the impact that that has on valuation. I also think that we're about to kickstart an investment cycle, and it's going to be led largely by the private sector. And there's a lot of excess capacity utilization that is going to support dividend distribution and income. So I think you should have allocation to the local equity market for sure. Yields are going to come down in money markets. So you have to bear that in mind. It's a good time to take duration risk. So to the extent so if you can basically lock in relatively high, I really think this high teens rates in the market, given our economic trajectory, is going to be history, at least in the next 4 or 5 years. We'll go back to the era where high will be 12, 13%, and you could be single digit lows. So if you can lock in 10-year duration, 20-year duration money at 17, 18% yield, that's very, very attractive. So if you want to do that, and when those yields come down, if you need the liquidity, you can always sell your position at a premium anyway. So from an asset allocation standpoint, I really think equity number one, long duration bonds number two, and T-bills number three. I am a bit concerned about U.S. markets. I know there's a lot of people with exposure to the U.S. market. I think in the short run, they will run it hot from a monetary standpoint. But I think over a 24 months period, there is significant level of risk because of the concentration of how much AI narrative is shaping markets there. So that's my view.
All right. So you heard Arnold. If you invest in the U.S. market, be careful. But basically, equities, fixed income. Sam, I beg your pardon. Equities and fixed income. Alcohol is working already.
Long duration
fixed income. Yeah. Arnold.
So I broadly agree with Sam. I think so. I like to start in the US and then work my way down because America sneezes and everyone catches a cold. I think next year is interesting. I think politics plays out in the US. I think rates go down because they need to go down. Mortgage delinquencies, home ownership, job has now been tied to rates, and jobs 119,000 jobs added a month versus 500,000 a month from a few years ago. I think that rates go down. I think that is interesting for us. I think that's good for gold. I think gold has a good year next year. I think the Asians are coming. The Chinese investors are now aggressively buying gold ETFs as of November because of VATs and jewelry. The Japanese investors are on their own with gold. So I think that Asia buys more gold and that props up gold prices. I think US, because of lower rates, there's a bit of equity, there's a bit of risk still going into equities and crypto. I think that's interesting next year. Nigeria is also interesting. I agree with Sam. I think the equity market still outperforms and overshoots. Equity is done 60% in dollars this year. I think it has another 20%, but it will overshoot in USD next year. Duration risk, the same thing. I think buying long end local bonds makes sense. I think Nigerian Euro bonds are hard, or African Euro bonds are a little bit hard because I think we've already seen a squeeze in the spreads already. I don't know how much more the spreads can take for Euro bonds, but I think local bonds are interesting. Local bonds, Nigeria local bonds, Nigeria equities also look good. So there's, I think, a bit more risk next year. As well as, I always say this, I think that every investor should have a bit of precious metal in their portfolio, and we've seen that play out this year, and I think it can continue to play out next year.
Fantastic. Tunji?
What was the question?
What's your investment goals for next year?
Everything into my company.
What are you investing in next year? Yeah,
every allocation. Even if I can collect your own self. I notice. I like this your shoes. Every allocation is into my business right now. We're driving a massive onboarding conversation. Want to have total highest number of registered RSAs across the country. Period. We hope to do a lot of that in 2026. So we're doing everything as much as we possibly can. We've already started investing in that conversation as we speak. So if you have capital, come and give us.
we're going to be the biggest thing in the pension industry. And I'm not just saying this because I'm
like
being
that.
arrogant, but yeah, that is it. So yeah, if you have the money, bring it.
Otunba. I think, equity is just to be, if you're an early starter, I will put money in MTN, GTB, Nestle. Those are my top calls. Actually, no, not top calls, strong calls. I think that those three names, MTN is that one company that is in everybody's pocket. There's nobody, if you have a company that is in 70% of the population, I'm talking about 200 million people here, I don't see how you get things wrong with such a company, right? GTB has shown just phenomenal. There's nothing like, I think there's maybe two other banks, and I did this work many years ago, but I looked at the entire EM, there was maybe two other banks that had the same return profile as GT Bank, and they've maintained that return profile. So I'm very similarly Nestle as well. I don't know how they do it, but the value that's been created in that company is just amazing.
I think Nestle is probably worth at least 5 times what it's currently worth.
So from my equity perspective, those three names I think are clear winners for me. Personally, I'm a bit bullish on the Middle East.
Middle East?
So I think real estate in that space. I mean, just give me what's happening in the US and in England. You have, the Labour guys trying to kill everybody in England now with taxes. So I think there's going to be a shift of capital from the UK market to look for somewhere else, maybe whether Europe or whatever. But I think some of that money will end up in the Middle East. I do think that the market there is a bit heated just since COVID, but I feel like if you are
heated as in bubble?
No, it's everything in UAE has gone up at least 70% since COVID, right? But the thing is, there's still latent demand to support it. However, I don't think that the income that people are making in the Middle East can support the kind of real estate prices. But I think that you can still get yield on the right. If you buy the right kind of property, you will get yield, in dollar terms, right? So I'm quite still positive on that end of the market.
All right.
Yeah, those are two things.
Okay, so for me, I think, if I'm thinking investment goals and strategy for 2026, first on the business level, I think it's continue to, double down on my own business as well, expand it, grow it. I think that is very key to my goals. I think that should be key to any entrepreneur's goals as well. You want to continue to expand your business. On a personal level, I think it's okay to invest in equities, bonds, and all that. That's fine. We all know invest in equity markets now because there's going to be a bullish streak. I think around April, May next year, and then probably might be a downer. So that's okay. But I think one other thing that I would want to invest in more, and I would encourage a lot of people to invest in a lot more, is themselves. I think it's important to invest in your healthcare, your mental health, invest in things that keep you going, right? Because it's very easy to discount how your mental health and healthcare can be a major risk to your entire investment profile. So I think that's one thing that I'm going to pay a lot of attention to as well. In 2026, like how well am I? Am I okay? Am I in the right frame of mind, and all of that? And then, as Mayo said, I think for everyone who's paid a lot of attention, Naira assets are likely going to get a bump next year. So I think it's very important that that becomes a very huge part of your exposures, whether it's through the equity market or the bond market, but how you strategically play the Naira market is very important. Finally, on a personal finance level, invest in where in where you have the most expenses. So what I mean is, if you're heavy on dollar expenses, maybe you have family abroad, or you have dollar expenses, or you have dollar mortgages, I think you've got to focus on that. A lot of your exposures go towards that as well. So as much as you're having, Naira likely going to perform better than dollar, you want to expose yourself to investments that can pay that bill. I think it's very important that we'll take cognizance of that. Lastly, guys, before we go, we're getting to the end of this particular session. I will start with the rum drinking Otunba. Start, stop, and continue. So I know we don't set goals. We all said we don't do New Year resolutions. But if it was something you were to start, stop, and continue next year, what would they be? What are you starting? What are you stopping? What are you continuing?
Start with somebody else. I think about it. Start with somebody else.
I start with somebody else. Okay, who is willing to go first? Sam? Okay.
So I'm currently on a weight loss journey. So I've lost about 8 kilograms in 6 weeks.
Oh wow.
And accompanying that, but I have been, because weight loss has like 3 facets to it, right? So it's like you need to eat well, and you need to sleep well, and then you also need to exercise. So I've been eating really well, but the sleep and exercise hasn't really worked. So I want to figure out how to sleep better, and I want to start going to the gym properly. I go to the gym on an ad hoc basis, so that's what I want to start. What's the next one?
Stop.
What do I want to stop? Late night snacking. Late night snacking. And then what I want to continue is just immersing myself in culture and traveling a lot more. I did my most non-related business travel this year with friends and family. I think I went to about 7 countries. I didn't realize that was a part of my life that was missing in terms of culture and experiencing new things with people you care and love. I want to do a lot more of that in 2026.
All right. Arnold, you want to go next?
No, someone else next.
Tunji, you want to go next?
So I want to start receiving help.
Receiving what?
Help. I don't know how to get help. I don't know how to be helped. It's either I do it myself or I don't do it at all. It's a problem. I don't know how. It's either I completely delegate or I completely do it myself. There's no fine line. There's no, okay, let's get this done. So Tunji will hold this part. I'll help you carry this part. So I really need to start getting help. It really, if there was one downer this year, that was probably like I could have, broken down a few times, but thank God for good health. I need to stop avoiding conflict. I'd rather just ignore you than confront you. I realize it's not very helpful. No, that's even the funny thing. So people who really know me know that there is a difference to the real Tunji than the person that focuses on the camera. So if you really know me in real life, it's not that guy. I'm not very confrontational at all. It's not it. But if anything is to continue, is at first I used to think this was a bad thing. People used to say it's like, they say Tunji can suffer. I used to think it was an insult at some point. But I think it's them saying that I have a high level of resilience. So I think I want to continue to show that because it's beginning to tell for me. So yeah, those are my things.
Really? Have you gathered your thoughts now?
I guess it's very similar to Sam, I think. He said a lot of things I was thinking about.
What to start?
Start would mean
more
that
animals or what?
No, that would be continue actually. So start, I think essentially, doing better in terms of adding one more hobby to what I do. thinking about as we get older, how do you live better eating habits. One of the things I did recently was to do a sleep test. And, they checked my sleeping pattern and realized I only slept, deep sleep was only maybe an hour. So clearly, and that is when your brain is being able to retain memory. So, and I go to bed on average 3 a.m. So if I can do better, maybe try and go to bed at 10, 11. That would be something that I'd love to start. Continue, definitely. I find that the only way I gain knowledge is by seeing the world. I was in Thailand very recently, and then, they took us to these floating markets, dirty water. They were selling us all kinds of things in the water, and I thought to myself,
Makoko that travels
exactly, like how has a country been able to attract 31 million tourists and sending an illusion that this is a place you want to be for holiday? Food is cheap, $2, $3, $10. But, Nigeria, we have a lot of these things. I'm saying, even people, you go to tourists, you go to the Buddha, the temples. And I'm saying, what's wrong with us putting together an Ifa shrine and saying that is a tourist
destination? Funny enough, we have it.
But how many of these things are being monetized, right? So, but I definitely want to continue to plug into sort of that cultural understanding how the world works. But, you do realize that Nigeria is sort of a wasted opportunity if we don't very quickly change the trajectory of the country.
All right. Any questions for any guys and any members of the panel? Questions?
Question, Bao.
Yeah. We have we can take 1 or 2 questions for anybody. What? What did you say? I thought you had yours? Oh, you remember now? Oh, okay. Sorry, I passed you already. Okay. Oh, it's fine. Quickly, why would take questions? Oh, go ahead. You want to? Oh, okay.
Yeah. Good evening, everyone. I'm Chi Dozie, a cybersecurity analyst with Globus Bank. So my question will be to Oracle, please. So as someone who is looking towards the scope of being a long-term investor and has a medium risk appetite, what would be the best piece of advice for him? Thank you.
All right, great. Any other person with a question?
Let's just take a
for the gang. Okay, that's good.
Thank you.
Any other
Yeah, that's you.
Okay. So again, the context matters, right? So I don't know if you're talking just Nigeria or globally. Long term, I like assets with cash flows, right? At the end of the day, investment return or value is the net present value of future cash flows. So to the extent that you can estimate cash flows and you can put a discount rate on that, and you have quite high level of confidence that those cash flows are going to be realized, then you can invest. And cash flow comes from different assets, right? It can be equities, it can be credit, it can be real estate, right? So it's really around, if you have a high risk appetite and you're young, you can take higher perceived risk. Because I'm always very careful around this concept of risk, right? Because I don't look at risk from an asset perspective. I look at risk from a probability of loss perspective. So what do I mean by that? You can have a highly risky distress. So for example, some people might say NNPC is a bad company, right? And it is. However, what price are you getting for the assets that NNPC has? So the price value nexus for me is always what drives whether something is attractive or it's not attractive, not what asset class it is. Today, I can say that fixed income is probably more risky in Nigeria, within the context of Nigeria today, than equities, right? Because of the margin of safety that you have in equity values, right? So I just look at things from that perspective, from cash flows and what price am I paying for the value of that asset, not using just generalized rules of thumbs around assets and risk. So some people might say equity is risky, but in my mind, given where valuations are and given where we are in the macro cycle, it's probably the best time to buy the asset.
All right, fantastic. This is where withdraw the curtains on Drinks and Mics
2025.
season 2 halfway season 2. But I don't know if we should do buy, sell, or hold. But I mean, we're short on time.
We've done 3 hours, 20 minutes.
Yeah, we were short on time already. So yeah, we've done a lot of time. We're short on time. So this is at the point where I want to first of all thank everyone who has made sure that this live audience session has been successful. First of all, I want to thank our supporters, our bar for supporting us. I also want to thank, a round of applause to our bar for supporting us. I also want to thank Notes Finance. We have their MD and their co-founder here as well for supporting us. Thank you very much for that. I also want to thank Unilever for supporting us as well. Shout out to Unilever for all this support. Also want to thank UAC and Late Drop, who have been our partners all through the last season and continuously for all the support. Thank you to that. And to the team who have made this possible, the entire Drinks and Mics crew, you can see them on their t-shirts. These are the guys who make our life easy. So please, a round of applause to all of them. It's not easy. We stress them a lot. So these guys are hidden gems. They're amazing guys. You can't imagine how much work they put into getting this done. So thank you very much for that. And to all of you who have been a part of this, we thank you so much for being here all through this session. And to our audience, thank you very much. Please also tell us in the comment section, what is your start, stop, and continue? Arnold refused to tell us his own. There was no time for me to say mine. I would have said mine, but there's no time. Thank you so much for being a part of Drinks and Mics 2026. Until we see us next time in 2020, Drinks and Mics 2025. Until we do this again in 2026, do have a profitable year ahead. Goodbye. Thank you so much.
At least I took a break.